That's fine. We'll get over there late. Never late. Better late than never, right? In this
So,
regard, but
did y'all hear about the GameStop movie that they coming out with?
we'll get into some of those things. But let's stay on
Yeah.
point, because this is a training session tonight, and I want to make sure I value your time. But no, we can speak on that too. We'll get to the point when we come on the back end of that, because that still has a lot to do with what we're talking about, right? Because we're talking about what are potential opportunities that we can look forward to in terms of what the market's going forward, right? If majority of what we're trying to do now in terms of seeking alpha in places that may or may not provide great opportunity because they already had their cut running through them, some of them may also get a second chance, right? It's gonna happen. Now, again, removing all your biases, because you have to do that now from a beginning of the year assessment. You can't take no preconceived biases into this year than you had, let's say, the last 2 years. Why? Because we know the market's going to be a whole new different animal, right? And it can easily set you up in a fool's gold perspective, thinking that, okay, these stocks are still solid, right? Come on, this is Apple, right? This is so-and-so, right? Because that's what most people say. They say it with a very braggadocious entitlement mindset, as if these companies can never, lose some kind of form of gain ground in terms of their innovative values or their brand recognition, right? Well, we've seen companies come and go all the time, right? Think about people saying that about Lehman Brothers back in 2006, 2007. But it's Lehman Brothers. You crazy? That's AIG. Now you stop, right? And then the subprime lending crisis hit, and guess what happened to them? Dissolved out of there, right? Jim Cramer beating it. Oh, that's Lehman Brothers. They could never won't have it. It won't have it. That's Lehman. Out of there, right? Markets are brutal, right? Again, as they say, we don't love them, right? They don't love them. They don't love them. Markets do not love them. And they're not loyal. So that's why we say we rent, release, we don't own. Because the worst thing you could do is become, as they say, implicit biases are problematic, right? Obviously. Markets a variable in nature, right? You have to pivot, right? You have to learn how to pivot. That's the only way you're going to be substantial in growth, not just growth stock, but just in your growth, is learning how to audible your money, right? How to move it when it's necessary, right? Again, we're coming out of out of the coffee can, underneath the mattress. From out of the mattress, we're going into the cupboard. From out of the cupboard, we're going to the cookie jar. From out of the cookie jar, right? You're going in the great auntie, maybe her Brazil, right? Most women keep their money in Brazil. You dare not. You look at it. Boy, you go in there, boy, you might have to, you trying to, she going to bribe you with a PlayStation, a gold chain. You come here, hey, come on. Right, you're going to put in some work. But reality is that's how you need to assess the market, right? Again, looking at those stocks, what they did last year, say, or 2022, or 2020, can they do that again? Can y'all say the same thing, right? I know we're using Netflix as a case study. Can y'all say the same thing about games? Since you said GameStop, just using that over Sunny, can you look 5 to 8 years in the future and assess GameStop at about $500 a share? Go. No right or wrong answer in this. This is just a honest,
I was gonna say yeah
assessment.
I was actually gonna say yeah, because I don't see anybody. I was just gonna say I don't see any other gaming company that's actually outdoing them. And plus, with what the investors that they do have within they stock and within their company, they always are up to date when it comes to the new tech ideas as far as in their league. So I don't see nobody beating them within 5 years.
So let me ask you this: what exactly does GameStop do?
They do well.
Do they
as far
engineer
as
gaming, or are they just a purveyor of the games? Or are they just the middleman?
Purveyors.
They're the middleman.
Now, again, no right or wrong answer, because this is Trey. I love this. This is you think tanking your way through a natural assessment before you start putting digging into the books, right? In a place where you say to yourself, if they are pure play on providing the content, the content, but providing the finished product, basically like a convenience store in a lot of ways, right? Mm-hmm. What also stops somebody else from being able to do the same thing And the fact that maybe we move away from what a tangible, fungible game, and now we moving what more online streaming value, which obviously separates a person from an end user from coming into an establishment, spending money that way, old school, or even getting it sent online. What separates a company like Apple? What separates a company possibly even like a Netflix, right? With bigger cash flow, right? With bigger money to come in and squash. I'm taking a page out of what? Mr. Wonderful, right? Shark Tank, squashing them like the cockroaches that they are, right? Because they can't compete with a bigger company's money and purse and their brand recognition.
I was actually
if they move in. Let me finish the point. Let me finish one point and move into that space. Why? Because when we're thinking about natural competition as of today, going into the future, it can definitely offer up an opportunity for somebody to come in that already have what? A better opportunity, to move that user base from them into their package. Why? Because we said that with what? Netflix, right? Who came in right out the gate, and we knew that there was going to probably be one of the biggest competitors for Netflix is going to be who?
Disney.
Obviously. Why? Because the majority of the content that Netflix was playing was who was licensed through who?
Disney.
Think about all the Marvel stuff. They had Friends. I think that was Comcast that owned Friends, right? One of the biggest franchise syndicate, series out there, right? Still making billions of dollars to this day. People still binge watching on Friends. They pulled that content off Netflix. That Friends episode, that the reruns were making so much money for Netflix alone, it was just retarded. So we think about that, like we said, YouTube, right? Imagine if again, you had a little piece of information out there on YouTube, utilize it, and somebody pulled the license on it. Like, now you can't use it, you can't monetize it. See how that work? Because you're just a purveyor. So that's what makes innovation, even in the streaming sector, when we talk about gaming too, because we're talking about Gamestop here, that's what makes these things very, very sticky when you start really assessing it from a business model perspective. Because what we're doing now, guys, we're trying to figure out how to become very executive minded, thinkers in terms of how we feel like business can or cannot survive in an environment where competition is it's like sharks in the water, right? Smelling blood. You don't have a moment to slip, right? Because the consumer is very wavy, right? They here today, going tomorrow. Feelings change, ideas change. The way you feel about, again, how many of you guys got a Sega Genesis still sitting around your house right now? Or old school Nintendo?
I do.
Right? Yeah. Collectors, though. See what I'm saying? On the mainstream, it forms the place of a collector's value for that regard. The people's thinking okay, I can't wait to see what the future look like in terms of gaming. Right? They're thinking about, if I cut the middleman out, I provide my own service, then I'll be able to get the lion's share of the money, right? Okay, case in point. What did Nike do? Nike did what to a lot of the stores that were selling Nike shoes? What did Nike do? Matter of fact, their biggest purveyors was Amazon. What did Nike do to Amazon? They pulled all their shoes off Amazon and start selling them direct off their website. What did that do to Amazon for the sales in terms of that?
It plummeted. They stopped the third-party selling.
Big impact. Cut the middleman. We do our own thing. We're the engineers. Make sense? So it's just another layer to look at it, right? Because you got to say to yourself, if we're going to put that kind of multiple on a company like that, meaning a $500 price point multiple, their profit share, their ability to make profit or revenue have to be equating to that of what? They found a new lease on life, and they got the user base beyond the investor. Investors are a small part in this because at some point, the fundamentals have to matter. Make sense? The ability to make money, and you have to make a lot of it, right? Wall Street will give you a pass for so long, and then you have to go out there and prove yourself. We saw that happen with the SPACs. What happened to all those SPACs out of 2020? We can go down the list right now. Clover, right? The list is endless, right? Space, right? Virgin Galactic, basically. Let's go pull up modern SPACs right now. What? In the dirt. They were very promising.
Slaughtered, man.
They got slaughtered. They were very promising.
Space is damn near non-existent. And they just launched Virgin Orbit?
Yeah, Virgin Orbit, right? Subsidiary value to that, that perspective too. So they're lenient when necessary. Well, that was a what our value. Why? Because the markets were doing what at that point? They was getting free money, free lunch. They was getting free lunch money from the feds, right? So it's like throw a dart at a stock, wherever it lands, you buy it, you potentially had the ability to make money off of it. So that's what I want y'all to start thinking about. This is another layer to your fundamental analysis, your assessment when you're looking at these stocks from a growth perspective, or as value plays that have the potential to be growth, or just glorified value plays, and they only gonna have a cyclical what moment to trade them, right? This is their season. Let's go hard. When it's off season, let's pull back, scale back, and wait for it to rotate back around again, like watermelon season, right? Old school, right? Y'all, they only grow what during a certain time, right? Well, organically, right? But y'all get the point. That's how markets work. That's rebalancing that structure. To be a bellwether 365, you got to be about that life, because that's the only thing that'll command your shareholder loyalty. And we're not talking about just a small group, right? Because think about it. When we think about the Reddit guys or the Wall Street bet guys, they really a small number, right? In relation to a hedge fund, that may be what the antithesis to that whole movement. Again, in this case, Citadel, right? That whole war, right? With Citadel against what? Gamestop and AMC. Well, at this point, if you look at the stocks, of course, they're paring back a lot of that that euphoric meteoric rise that they had. We saw that with the SPACs. We saw that with doing the crypto boom when Bitcoin was really taking off the first time, right? Everything was blockchain. Yeah, blockchain tea companies, blockchain sneaker companies. You had blockchain real estate. Not making this stuff up, guys. Y'all remember them names. Elfin, right? Davis Tea out of New York, blockchain tea. Them stocks went to just squeezing, right? Low float, squeezing. And you go look at them today, out of gas. Of course, granted, they're not a GameStop. But again, at the same breath, GameStop before the pandemic was already failing as a business model. They have to find a way to reinvent themselves. So from that perspective, you're not right, or off the cue by any aspect of that oversight. But now you have to start looking at it from a whole new different layer, right? What can they do beyond the cult value followers of them? Can they do to expand their balance sheet from a profit perspective to compete with something like what just happened with a Microsoft buying Activision, right? They can easily, meaning Microsoft at this point can easily say, we don't necessarily even need to use GameStop as a purveyor of our stuff. We're going to go straight direct to market and make them come straight to our website before we can upcharge them, right? Meaning we can get everything we need in-house, save all that from having to go through, into a location like that. We're going to make it easy, and we're going to throw you extra packages and incentive values too, because they got the cash flow to be able to offer something like that. Make sense? Natural assessment though. So you start thinking about man, okay, 5 to 8 years from now, okay, can the stock, gain that kind of fundamental growth? What do you call organic growth too? Now we're saying organic growth, meaning they have to turn profit, right? To be able to command that. That's how you want to assess it, right? Because that's an honest way to look at it without feeling like, okay, it popped off. It was great when it was good, right? But now Joker will be like, okay, all right, now the fun is over, right? Big boy pants are on. Now let me see you grow something, right? You can't do, NFTs alone, because like anything, NFTs eventually going they're going to become a fad, right? You can't bank on it being a growth story 5 or 10 years at the point or the relevancy where something else might be coming out just as hot. And that stills to show of what was popping 4 or 5 years in the past. Does that work? That's markets. So when we say there's enough to go around to keep you on your toes of understanding how to broaden your investment thesis well into the future, you have to start thinking like innovators, all of you all. That's how you're going to compete and keep up as an investor. If not, again, people fall into the way of saying, okay, well, all right, but this stock was this, it was that, man. I don't see why isn't it. That's not how the markets work. Stocks that have buying power because they have long-term, sticking power. Again, we talk about when you look at a Warren Buffett portfolio, a lot of the stocks are old school. He's been buying for a long time. They got glorified dividends, but they still figured out ways to continuously figure out how to reinvent themselves when necessary. But they can eke out of 8%, 10%, 12% gain every year, and they'll be like, we're good with that. We need to do no more because we got cash, since the 80s. cash since the 90s, cash since the 70s. They're comfortable with that. So they can pay a handsome dividend, just ride into the sunset. But a company like this, again, ask yourself, can that be the business model going forward in the future? If they can't reinvent themselves, well, people will want to go and what? Come into a GameStop to buy a game. It will be just like Blockbuster. So yeah, they're gonna have to make a power move. They're gonna have to pull a, I say this before, like y'all seen the movie Avatar, right? When Buddy, had to pull a power move to get back into the good grace of the clan, they're gonna have to pull a Turok Marteau moment. Think about that. That's the only way they'll be able to have a 5 to 10 year window where you can say, okay, I can see them 5 years from now, potentially sitting at a $500 valuation, not beyond the value that people just buying it from an ape perspective, right? The Wall Street bets, because that's starting to what? It's starting to obviously lose steam, obviously, right? We're seeing it right now in the stock price because they've benefited from what? Stimulus checks. How you think people were able to buy a lot of those contracts? They were buying it with what? Stimulus money. Think about that. They went all in on a call option during stimmy time, and they benefited, right? What they say, getting paid, right? That's the markets. So when you're assessing a game plan to be, as we say, removing implicit biases about how you should assess growth and innovation in the markets through any sector, that's where you want to start from. You're going to say, okay, prove to me that you bought that. You got to pretty much take that stance to it. Prove to me that you bought that life. Because if not, somebody's going to come eat your lunch. Or like Mr. Wonderful said, they're going to squash you like the cockroaches you are. Because they can say, I could duplicate your business model. I got the cash. I already got, big money loyal people in terms of institutional investors in my scenario. We'll copy your business model and make it better. Right? Because that's what's going to happen over the next 5-10 years. You're already starting to see how companies are starting to consolidate. They can't compete on their own. What's happening in the telecom world right now? Telephone companies are merging with some of the big dogs now. They're going to bind up these little telephone companies now. They can't compete on their own. They ain't got the money to put out 5G towers. Bruh, you better get with us, get down to lay down.
What'd you say, AT&T and Sprint?
What happened? I'm going to test y'all age. Y'all remember back in the day, y'all remember Voice Stream? So who bought Voice Stream out? T-Mobile.
Was it? Yeah.
Right? Remember it was Singular? Y'all remember Singular? Testing y'all age now. Yeah. Right? Singular got bought up by who? They got consumed in the same value in the net.
You know about that Singular, man.
See, old school, see? Right? What happened with Sprint?
Got bought out by T-Mobile. I'm mad about that, boy.
Right? Like, what happened to my shares? You were up big time. We got to put that trigger. But see how that works? That's how businesses are going to be able to survive in the future. They're going to have to consolidate. They're going to have to merge with a big dog. The fact that Microsoft sat on that bacon, they were saving that bacon. Y'all know I'm going with this. They were saving that bacon. They were waiting for the right price valuation for what? Activision to get to a point when they were dang near needing the lifeline, and then they swooped in and bought them at what? At a discount. Why would they want to buy Activision shares at $90-something?
That's true. Activision used to be like what? Like around 140.
Up in the hundreds.
Yeah. So
think about that.
Strategic investing.
And then Activision. Mm-hmm. I was gonna say Activision had all this allegation with the CEO. It was just proper time.
They were messy too. See, they was in damage control. They got what? They got desperate. They had to what? Okay.
Find a way out.
Boom. So the same way we look at markets to invest in companies too. Guess what? Big money do the same thing, do they not?
Facts.
They are investors too. They are investors too. What keeps them from buying out another company? Or quote unquote investing in it. You see how that works? So
what they call Apple, the iMod.
Basically, right? Charging people 30+% just to list their technology, their engineering technology, feet on their app store. They're taking 30% of these companies' revenue. These are small startups, right? That need every dollar they can get. And they looking at them like, bro, you want this exposure? You're gonna have to play ball, right? Like, imagine that. See what I'm saying? All that just to get exposure. we know the whole messiness of a Fortnite dealing with Apple in terms of licenses, right? Look at how that turned out. See what I'm saying? Fortnite took the world by storm. Imagine if they had to go to the App Store to deal with that level of a shakedown in revenue split. How big Fortnite probably could have even really took off. See how that worked? So all this is all it's all in the line of thinking like, okay, well, if I really stop and look at the world I live in and assess the competition out there from every sector, right? All the industries, global markets in terms of what they can do, in their particular geolocation as opposed to others. All this stuff matters because today, again, we're dealing with two basic principles, right? We're dealing with two basic principles on the consumer dynamic. Either you're a consumer, right? Or excuse me, let me say it this way. Either you consuming a product, or you consuming a what? Service, right? Nonetheless, anybody that produces a business model or whatever, you're looking for what? A consumer, right? And certain things obviously, move better than others. Why? Because it depends on the use case. Products always are going to outlast what? Services. In most cases. Why? Because you can touch it, you can feel it, you can smell it, you can eat it, you see what I'm saying? It's more of a reality. But the NFTs are changing that now because you're dealing with digital pixelation, art. But really, would that stand the test of time? 5-10 years in the game alone, without having other things to kind of make it a pageantry where you can say, well, okay, well, you're gonna need the metaverse to make this stuff stay relevant. You're gonna need a lot of people to move into the virtual reality world, which we're gonna go there. We're gonna have our moment in the sun. That's what innovation does. It gives you a 10-year window to make it what? To make it do what it's gonna do. That's how the market look at you. They look at you like, look, you got 10 years to make this pop. In some cases, that window's being shortened. Now it's being shortened about 5. You got 5 years to make this pop. If you don't make this pop, on to the next. Markets are brutal. They don't care about your feelings. They don't care about your likes, your dislike. They don't care about none of that because money don't have no feelings, right? It's trying to chase what? Few goods and services, right? We're seeing that now in inflation, right? Well, we know that even though when the inflation aspect comes down a little bit, you still gonna be paying higher prices for things than you paid in 2020. Why? Because nothing never goes back to what it was before. They've already stress tested your what? Your ability to maintain a life. How you think cost of living goes up every year and nobody really checks it. Why? Because if you're not getting a pay raise, you going under the next year. We talked about this like a million times. That's why CEOs are forced to pay you what? More now. And they're trying to offer incentives and bonus because they know inflation is here to stay. In some cases. Pricing power. People figure like, oh, they got money to spend. Keep them prices up a little bit. That's why they're trying to put together a panel to stop all price gouging. It ain't gonna really matter at the end of the day. Because Wall Street has a way of figuring out how to rig the markets. And we say global markets and supply chains is that third and CEO, because they know CEOs are greedy. Hey, we'll make sure we keep things at a static level, at least to the point where we may not go back to where we were before, under 2%, but we'll definitely say, okay, this is manageable at 2.5, maybe 3. It ain't 7 no more, but guess what? They got higher wages now. So they got, at least a compensatory value of money that they're bringing in to equate where they can still pay for these products. That's how they play people, right? So it's no secret. So when we thinking about our game plan going forward, when we're looking at all these stocks, be it a Gamestop, right? Be it an AMC, Gamestop can easily go back to 500. Don't get it twisted, easily. The question would be at this point, the same way we look at the stock, when it goes up like that, and if you hit that place again and you can't break through it, what do we call that? Good old-fashioned double top. Good old-fashioned market exhaustion. You couldn't, go ahead. You about to say something smart. You reached the point of what? Your zenith again, and you couldn't really what? Keep that, hold that, manage that to say, this is our new level of what? Support, right? Old resistance become new support, or old resistance stays what remains new resistance, old resistance, and you what? You plummet, right? So everything has this moment to prove itself. So as I like to tell y'all, every day the market has to prove itself to you. You don't have to prove yourself to it, because there's no prerequisite for you to be in a position to what? To access it. Makes sense? You got all the power. Even with if you got $100 in your bank account, 1,000, 100,000, 10,000, you still got all the power in investment value. Make sense? Make it count. Right? Long-term, mid-term, or short, short-term, mid-term, or long-term, make it count. If 3% is the window of opportunity to success, I ain't got no problem with saying I could be happily, proud of receiving 3% out the market every day. Again, we use a basic synopsis. What's 3% of $1,000?
$30.
What's 3% of what? Of 10,000?
Was that 3,000? 300.
300. What's 10%? 3% of 100,000?
3,000.
What's 3% of what? $1 million?
That's 30,000.
If you figure out how to control $1 million worth of what marginal asset and able to get 3% a day, that's 30 racks a day. How hard is it to really define 3% in a marketplace that's greedy, that's, again, a wild beast savage, environment in some cases, because we know that the markets have been spoiled because of the Federal Reserve money like that. Because I know people was just moving with $1 million in margin. They built themselves up to $1 million. Hey, we were dealing with $1 million in what? In leverage over there trading there. And you only had to pay like 25 racks. Well, it was less than that if you got the upgrade, right? I mean, the first day dude came to me, he's like, dude, we need to give you $1 million. You got a little following. We know you can manage it. We'll give you a discount, right? This was true, bro. Like, okay, yeah, you could trade these stocks that we were hitting up, doing our little, 1 cent spread. Y'all know, y'all been there. That's leverage. You just clocking out and then moving on. I'm good now. I don't need y'all service no more. I'm gonna go get me, 100%, financed, TD Ameritrade account now, right? Let me put this money here and let me get my 2-for-1 American leverage. And I'm good to go. Or margin, excuse me, my 2-for-1 margin. I'm good to go. We saw that happen with Buddy that bought them Apple calls. Remember them? Let's give them the Apple puts. Remember? Y'all know what I'm talking about. Go. Robinhood gave that dude how much leverage? Are you kidding me? Couldn't make this stuff up. Now, of course, if the trade went his way, he'd be smiling today, of course, right? He just picked the wrong way to go against the grain. But it's crazy when you think about that, right? So, case study in point, if we're thinking about Netflix, that's a $100 drop that happened tonight. $100 drop. How many people y'all think that was in margin in that trade? That were using margin? Think about that. I would say at least minimum 33% people had margin in that trade.
You talking about to the downside?
Yep. Meaning they had margin long.
Oh, long.
And they got crushed tonight because the stock dropped 100 points.
I was gonna say 40%. So they're gonna be mad in the morning, man.
You know whether I know their phone is gonna be blowing off the hinges tomorrow from margin calls. When people say margin calls, like you people make jokes about that. Oh, y'all get a margin call in the morning. Boy, you don't want to have to deal with that.
I already knew it was about to tank, man. Yeah, I seen it on Stock Twitch. Boys was talking about they had bought like 10 or more contracts of calls. I was like, good luck to you.
Assessment of risk. It's essentially what we do every day. We are risk assessors. We are risk mitigators. We are good reads on risk. It's a profession like none other guys that we do every day. You got to love something like that. You have power. You don't have to have the millions and the billions to be able to make executive decisions about understanding how to mitigate risk better in your life. As an investment thesis, of course, but even in real life too, it's synonymous. They go hand in hand. No secret there. We don't understand that. This is teaching you organizational skills. It teaches you how to multitask better. It teaches you the ability to compartmentalize your what? How to assess risk in your life, right? This stuff follows you, right? Because you become better in your research methodology. You remove a lot of implicit biases and realize that the market don't care about your feelings, right? Y'all see the means F your feelings. Y'all know what I'm saying? Market don't care about all that. They don't care about race, color, creed, sex, gender. orientation, midget, humpback. Y'all know the spiel. He don't care about none of that because money has no what?
No emotion.
No emotion, no feelings whatsoever. It has a purpose, a design. It's a tool. It is following what? Again, as we know it to be today, it's chasing what? Few goods and few services now because of inflation. So people are piling in the places where they know at some point that rug will get pulled. And what happens is markets will set you up as if you can never do wrong, meaning your particular asset could do no wrong. And then you overstay your welcome, right? Because you're not excited, you're not happy with a 30% gain. You're not happy with a 70% gain. You're not happy with a 100% gain. That ain't enough, bro. I need more. See how they set you up? Because
somebody finna be getting divorced next week.
Oh, bro, you know how this stuff go. Y'all know how this stuff go. The markets ain't no joke, right? Because a lot of people came to this, they had no understanding about market correct. They had no understanding how markets work. And they just jumped in because they followed somebody else's advice, maybe through YouTube, whatever, but they didn't understand that this is the education value, world that we need to kind of assess. And then what happens? Yeah, you will have scenarios like what that dude that happened over at Robinhood that took his life because he didn't understand how margin worked. He thought he was in the red, right? Hundreds of $1,000s, turned out he wasn't. He just didn't understand how to read margin, and he took his own life. Family sued Robinhood. You should have made this more legible for these guys to understand it. Kids jumped into the game because they saw this was the only thing popping back in 2020 during the what? The pandemic. No education whatsoever. And they came in with implicit biases, no understanding how markets work. They thought that, I heard my so-and-so make this and did that. I could do the same thing. It's hard for people to realize that there's a pause button in life that sometimes we all got to press sometimes.
That was in the movie too.
Makes sense? See? So sometimes art, we say imitate life, sometimes real life, it has to be portrayed in art because it needs to teach a lesson to somebody at some point to stop them from jumping out the window, right? Wall Street been known to do that for years. They the most irrational suicidal industry than all the others out there. Why? Because these guys can't taking L's. Now, a Wall Street banker will take an L on an investment portfolio, right? Obviously, your client's money, maybe a little bit of his own, but for the most part, they have ways to somewhat trying to balance back, right? Because they always got friends at high places that'll help them get back in the game. Those ones who can't take it and go out the high rise, right? It happens a lot. More than y'all probably think. That's because, again, these people have gotten the wrong assessment about how life really works. Their greed has no end, right? Because they feel like their success is based upon them constantly being able to just make money all the time and at the level where they can look, rub it into other people's face, maybe, I don't know. It's ignorant, right? Because y'all know we built for this. Why? Bro, if you come from a place where people already kind of was holding you back and not, really give you your just moment, you're like, bro, I'm built for this. What you got? That's all you got? All right. Man, look, we finna get it. Because our emotional attachment to this is non-existent. Me coming in like, oh, y'all let me in the door now? Oh, it's on. Oh, it's on. All right. Gotcha. Okay, I made that mistake. Won't try to definitely lessen that one again. Make that mistake. Won't happen that again. This right? Okay, good to go with that. Let's go. So you sit from a unique place as an investor. So when you assess this year and you say, okay, well, we know growth going to be taken to the woodshed. Well, at some point we know growth going to rebound. Like, who don't want to own Apple in a long-term portfolio? Like, how many fund managers that are attached to unions have Apple in their portfolio? A lot. Do you think they're just going to stop buying Apple just because if they lose some money in the next 3 to 5 to 6 months?
No.
You do like everybody. Okay, let it get cheaper. Would you want to own Apple at, this is hypothetical. I ain't throwing a price fight. But wouldn't you love to want to own Apple at $100 a share?
Absolutely.
Yes, sir.
You think Warren Buffett won't back truck up and spend that money he been sitting on? He could have been buying Apple at 150. He could have been buying Apple at 160. He said, no, I ain't spending no money. He spent literally no money in 2021 dang near. He sat on all that cash. I think it was over $650-something billion. He sat on it. And just was mad at him like, man, everybody waiting on Warren Buffett to deploy some capital because they knew as soon as he would deploy that capital, they were going to follow his trades right on in there with him. Because instantly his name moved markets. Make sense? He gave nobody that satisfaction. Think about that. He just sat and just let those stocks work themselves out because he invested in what? In advance. Let them go to work. Right? It's about discipline patience, the whole reality within that, the things that we profess more than anything, because this is a broken record thesis. Why? You have to get comfortable knowing that, guess what? I can't chase the markets every day. I can't get excited every time a new product or something come out, because at some point it's going to have to prove itself. The SPACs showed us that. We was excited about them in the beginning, but we had to find the ones who really had at least a lane to profitability, right? At least a business model to potential profitability, right? On the estimate of go ahead, Ober.
Strong use case.
A strong use case, right? That's why we use those terminologies for a reason, because if not, what's to say another company that's already out there loaded in cash can come squash them, right? It ain't patent infringement if you change the I, right? Change the letters and move stuff. See how that work? Apple been doing that for years. They've been copying people for the longest. The whole issue with the whole Qualcomm and Apple, how they were stealing these people business for the longest. Apple known for stealing people stuff. They've lost their innovative touch a long time ago. They lost one of their number one engineers. But maybe 3 years ago that guy left, 2.5, 3 years ago. They've been stuck ever since. So again, but some people go fall back to that, right? So again, that's what we're trying to get all of us to see. Collectively, we are the new assessors of opportunity and risk in the markets. Why? Because we've done it so much at a consumer level. Who knows markets better than you all? Seriously. And y'all know what I'm saying by that. Who knows markets better than y'all? Because a lot of people trends are set in your based upon your spending habits. What you see is cool or fad or whatever. It's at different levels, right, of money, because maybe we ain't at this store all the time, but when we pop in there, it's gonna be a reason why we in there. And they watching, they taking notes, right? So that helps you with your investment thesis the same way. Right? It helps you in the same way. So this year is going to be you sitting down, figuring out, okay, where is the money going to pivot to? How can I get ahead of the year already? It's still the beginning of the year, guys. We just 20 days in, right? How can I start planning now for 2023? How many of y'all been thinking like that right now? Not for March, not for June, not for fall. How many of you guys been thinking about for 2023?
Oh, I have.
Let that marinate. Why? Because Wall Street, that's what Wall Street does. They're trying to have less taxes. That's what we do about we talk about for us have investment, hold positions for all years. So you have to worry about having to deal with the tax, right? The high inflated tax comes with capital gain tax. They're trying to put those trades on now so they can sit through all the pain, all this stuff now. And they also buffering those trades through buying protection. How are they also buying protection? They're using the derivative market. What is the derivative market? What is the derivative market? Everybody, y'all know what it is. What is the derivative market?
Talk about options.
Say it with your chest over.
Options.
Options. That's how they pad their risk.
Less for more.
And they can easily exercise those positions and take on them in real time, given the fact that company can prove itself. Make sense? You have that same ability to do that too. You can take a stake in the company, 5, 6, 7% of your portfolio, then backstop it, hedge it through the option derivative market to have an extra layer of protection just in case things don't work out. And of course, you put stop loss on that stuff too, right? This market is tailored for people who are patient in the right way, but progressive in your ability to search these opportunities out. You can have it both ways in that lane. In that lane, this is the best opportunity to do that through. Markets affords you that, if nothing else. Right? So we talked about this stuff literally at the beginning of 2021. Literally, we did. We did this through a lot of you guys through individual training when we talked about how to assess long-term growth, giving your time allotment in the markets. If you ain't got every day to be in the markets like some of us, or if you swing trading and don't have enough time to be in the market like that, yeah, You can put forth together what? A 3-month window game plan, a 6-month window game plan, a 9-month, 12-month game plan, and let your money work for you through that perspective. Void of it, they're still sitting in the savings account collecting dust. How you still, you get my point. Matter of fact, we did this one here real quick. We did this one today. I think I did this one here with you over, Brandon, in your 1-year assessment. We did what? PCG, right?
Mm-hmm.
PCG falls underneath what? Utility and a doggone what? Energy-based company. Right? How many energy companies really go out of business that y'all know of? Energy companies now. Seriously, I'm asking for a friend.
Not that many.
Energy company. Rarely, right? Rarely. Go ahead.
I don't know it. I don't know.
I only know one, and that's Enron.
They're more energy or the hybrid, with the hybrid company.
I think it was a hybrid company. Enron. Yeah.
Rarely. Like, think about your power company that's in your neck of the wood. Like, especially in the South, Georgia Power. I had Georgia Power out down there, Hinesville, Georgia, right? Or Georgia Power, right? Dominion up here in the DC region, right? California got, Edison. They got a couple of them.
Energy.
You out there's Oberson. You got PCG. You got who else out there?
Cambridge Energy just went down.
Cambridge. Did they get bought up by somebody else? Somebody else took their assets, or did they completely dissolve?
No, they didn't complete it yet.
So somebody buying them up, right? Somebody taking over that.
Yeah. They didn't say that. They didn't say it yet, but somebody's buying them up.
It always happened that way. Basically, just you move from one management to the next. They rarely dissolve and go 100% to zero and cease from business. Why? Because
it's no, I was gonna say I think it's a company called Amplified or something like that. It's AMP. Yeah, I think they was in talks of buying them up because they was that oil spill thing was part of their thing, and then on top of that they was already in debt. So when they had spiked up during that whole little speech part, they went right back down because of the spill. And then through that spill, and then everybody having a big backup with supply and demand, it basically killed their whole organization.
It happens, but guess what? That's just bad management. The infrastructure that they manage is already up and play and running. See how that work? It doesn't dissolve and go to zero because that's real estate. That's cash flow that's already still to generate. You just need better management. So the company never really goes under, right? The model of it in itself, you just need to come in and take control of the infrastructure. So they never just go completely down where people lose power, all this stuff go to zero. It rarely would that happen. See how that work? So these are what considered to be Wall Street knows where the money at in terms of, what they call continuity dollars, right? Continuity money. There's no lag in power. It only volleys between volleys in value based upon supply and demand, right? We seeing that now. We're getting a crash course in inflation by the value of commodities, right? So energy is a form of commodity in a lot of ways, right? Beyond the natural gas, right? Think about that. And it's ubiquitous. You living in a first world environment without power. Good luck, with your little, European candles and all that. Good luck, right? Right. So this is the reality of what we're talking about here in that regard. Okay. Consistent in that perspective of figuring out where you can move money. This just case study, right? This is not, investment advice. Of course, we're not doing that. This is training. We're talking about a year into the future. Right now, PCG is sitting at how much? $12.54. Look at their yearly contract for in the money call going into 2023. How much that contract worth? $2. For deep in the money, right? It would be considered that because it's $12.54. Yearly call. Imagine you got $200 in your savings account. Which one of these have the better potential to attract interest? An energy company that has constant business, right? Or a savings account that's going to deal with a quarter basis point rate hike, maybe 3 to 4, maybe at best 5 in this year. In terms of the money market account, which one has the best ability to accrue interest? Anybody?
PCG.
Calling it for what it is. Basic, good old-fashioned energy company. I think they are the largest energy company in California, if I'm not mistaken. I think PCG still holds down that title. Think about that. This is a rotation. Now, all this is case study, 100% case study. Come to the charts, right? Matter of fact, let me do it this way. Let's go. Yep. Let's go straight to Google, right? Let's make it very, right? So let's do year to date, right? Right, year to date, this company is up what? 2.7%. People say, man, that's shabby, bro. That is pathetic. Now we just 20 days in. We're seeing a massive rotation starting to happen now between what? Some of the growth stocks. The shakeup is starting to happen now, essentially. Now, we're talking about stocks that are going to benefit because of inflation, because of energy prices, oil, natural gas, all that. Utility-based stocks that people are going to rotate in. And again, their business model also equips itself to deal with what? Clean energy, because that was a part of their what? They bankruptcy agreement that they had to perform what? Acquisition of what? A clean energy initiative to also stay what? Relevant into the future to help better, serve them in terms of what? Keeping them from having to start forest fires with they what? Bad power lines. Y'all know those be all right. And PG and E is not no new trick on it. Year to date, 2.7%. Right? So in the same way we say, well, okay, we look for 3% a day if you day trade. Well, imagine if you look for a minimum of 3% on an entire year. Is that still not beating the money market account? How much a money market account paying right now? Good luck. Crickets.
Right.
Crickets. All you banking and finance jokers in here, all y'all gurus in here, y'all quiet now, huh? You a paper chaser, you got your block on lock, remaining the G. What y'all quiet? Come on, all my ballers and shot callers. Where y'all at? Again, you're just figuring out, okay, I don't have to swing for the fences all the time. I'm just putting out a case study here. Now, this is just general question. Do y'all think this company gonna remain at 2.7% by 2023, January?
No.
Do you think it's gonna be less than 2% by 2023?
No. Not a bit. What's coming down the pipeline? What's in favor?
They raggedy behinds gonna end up going back up.
Here's what's crazy. Look what this stock was before they hit that bankruptcy. 60, 70 bucks. They were there 2017. 40, 57 bucks 2018. 20 bucks around 2019. They went through all that through the bankruptcy. And see what Wall Street's saying here? Oh, we hit $9. Oh, okay. Okay. Loading the boat. This is one I was telling, of course, we went through this already. Ain't nothing new. I'm just using it as a case study. We was parading this stock around $9 a share. Not investment advice. That was just our thesis saying, hey, these are kind of companies that we're talking about. That was, again, right around mid-2021, even parts of 2020, when they was kind of finalizing the rest of that bankruptcy. Now sitting at 12, right? From 9 to 12, you can do the percentage gain on that, right? They kind of back into the saddle, being able to kind of get their business affairs in order and try to start being back the conglomerate company that it was. This is what we're talking about as far as finding those plays, because we do realize the rotation is going to move away from too much growth into some more better value plays that may start, to get their ticket punch for a change back into a place where they were kind of prominent at some point because they're cheap. This is the mentality that I'm trying to invoke, right? Within doing this. That's all I'm doing. I'm trying to invoke that energy so you can say, let me be a little bit more expansive in my research here, right? It ain't hard to go to Google and put in, okay, okay, like really quick, right? Y'all see my screen here, right? See right here? Wall Street, right? Geo tagging queries. People are already starting to do their research, right? Obviously. See how deep the rabbit hole goes, right? You can click on dang every article they got here and just cross-compare analysis. Eventually you'll start seeing some names doubling up in some publications than others. What's that's all about? Okay. I guess a lot of people starting to favoring this one here. There's so many ways your research methodology is going to suit you well when you have a more inquisitive mindset than if you just feel like, okay, I think I'm good where I'm at. That's not how markets work. It's constantly growing. We would talk about emerging markets like forever, right? In 2020, right? Man, emerging markets are going to come back swinging, right? Because we were big on them in 2018 and 2019, basically, because of tariffs, that kind of stifled that a little bit. And then they began to say, all right, these industries are going to They're going to get back to business as usual. When we get past all that, COVID definitely put a wedge in that. Countries like or nations like India, South America, right? These are emerging markets that are just destined to boom. They're destined to boom. That's why these companies want to get into their marketplaces now. Apples and Teslas and all that. They're trying to hurry up and get into them places because they got the head count, number one, and they have the infrastructure to build upon, meaning that basically a flat surface to build on over there. But the competition is basically non-existent. So yeah, emerging markets definitely need to be in your list because they're going to do well in 2022. Not Nostradamus, but I'm just saying emerging markets. Right? Keep them on your on your radar.
Hey, Obo, if you go to Yahoo Finance and you click on the holdings, another way I trying to find like a good thesis for my stock picking. I go to Yahoo Finance and I clicked on holdings and I look on the actual the institutional hold and see which top institutionals is holding the most. And usually if it's over like 50%, it's a decent enough stock.
Oh, this thing taking me all. Okay, let me just hit news because it should be Yahoo should pop right. Okay, why is this thing tripping? Okay, you got to find it. So you saying you went to holdings?
Yeah.
Okay. You go through markets first.
No, I just typed the symbol in. I just typed the ticker in.
Oh, just holdings, period?
Oh, no. I type in the ticker. So CG.
You talking about using it as a query box, right? Because all the layers of information. Yeah. Yahoo, definitely. Yahoo's like, of course, they really morphed into a more inclusive finance website because the old Yahoo back in the day was just it was just like people fled and went to Google office, right?
Right. It was just terrible.
They morphed. All they did is reinvented themselves. Now they got a whole new lease on life with their Yahoo Finance perspective. Even got streaming services like through YouTube, and also some of these cable companies offer that as a free channel on their their websites now, right? So I use Yahoo for a lot of time for option stuff too because again it really helps give you a lot of in-depth information on terms of contracts and this, that, and third. You literally can kind of really dissect a lot of financial information through Yahoo. 100% right in that regard. 100% right. So you put in some like let me see if I can try to put up here. Let me see. I think you can still put it up here like this in the top unless they moved it around. Let me see. You might have to do it in the lookup box. Let me see. Yeah, I might have to do it in the lookup box. Let me see. I think it already had. Was it showing up? 650 calls. Let's see. All right. Oh, come on. Well, it's late.
Yeah, there you go, right there.
All right. See right here? It pulled it up. See right here? Netflix, basically 2022 440 puts, right? It's showing you all different ranges, right, of what this put literally did, right, today, right? Meaning this contract did today. You can track individual contracts on Yahoo Finance very thorough. Now, you can do that through TD Match, a lot of the other ones too, of course, but it's really good for being able to see it from the same way you look at the stock. This is showing you how a options contract would what play out, right? In any given moment. So very, another layer of information that you're getting and learning how to use options as well in terms of assessing the, again, does there a potential growth in that particular stock, in that options contract, or not, based upon how to read contracts better. So from the day, this contract, basically, if you bought it in the very beginning of the morning, it went up how much today? The 440 put, this is intraday. Now, keep in mind, options are what? From 9:30 to what? 4 o'clock every day. This contract went up today how much?
92%.
So they need a whole 100%. Intraday, how much it cost you to get into this trade in the very beginning?
What was it, 200 or?
See right here? That's how much it gained today. It gained a whole $1, a whole point, a dollar and what? $1.02. So that means you basically doing what? 212 minus what? 102.
What is that? That's simple math. What is that?
$1.10, right? So it cost you $1.10 to get into this trade today. Ahead of earnings. Now, this is before earnings. So meaning you could have cashed out before the bell. You want to do that binary event with the option with earnings, right? I'm just playing this in the earnings. Of course, it happened definitely more so in the back end because when if obviously it pulled back, that was even more of a downhill slalom for the stock because people knew it's going into an earnings play. People are going to capitulate. They're going to sell. If they're planning to get out, they don't want to deal with earnings. There's a lot of speculation behind the earnings. But this is how you also think as an investor too, because this makes sense in an environment where you're starting to see what? A lot of growth stocks are being taken to the woodshed, especially tech. It's going to be people who are going to definitely trade these binary events just for the idea that these companies are in trouble now. They just going to play them just into their release of their numbers. Essentially, day trading this perspective. Again, case study advice, this is not investment advice. We're just using this as a case study to realize how people are going to use markets to get everything they possibly can get out of it. And this given this fiscal calendar, based upon all the news that we're dealing with rate hikes, runoff on the balance sheets, QE, reduction. I mean, all this stuff is finna happen. It's going down this year. It's going down. So guess what? $500, into this morning, you would have been up roughly about $400-$500 in profit. It's that kind of search and seizure in markets. Right, 92% on your money. You came in with 10 racks. If you had that level of risk mitigation, 10 racks, you've been up about $9,000 to $9,800 in profit today. Right? Some, $9,300, $400 a day in profit. Spend 10, make 9. No sweat. On and on and on. 100,000, y'all do the math. This is the reality net. Obviously, if you held through earnings, like this guy, right? Right? Of course, I bought mine last week, Friday. It cost me 98 cents to get into this trade. 98 cents. That trade, if we keep the place where we're at right now, it should be worth about $4,000 in the morning. Spend $98, make $4,000, I'll take it. Right? Binary event, understanding the nature of the business, slowing business, in this perspective because of what? We might hit peak valuation based upon all the liquidity that was coming in from the Federal Reserve. We make an honest assessment where markets are at this point. Don't necessarily mean they can't return back to their promise, but as of now, they're very richly priced, going into rate hike environments, quantitative ease and reduction. People rotate money into more cheaper stocks that offer bigger bang for their buck. We're just playing into that level of capitulation, that level of needing to take profits because we overstayed our welcomes in some cases. People still holding on, thinking things still gravy. It's all love. Risking, one to make potential 10, something like that, dang near. Dang near. Right? This is the mentality. So again, these publications, these websites help you get a better, understanding how to read this, markets especially for the option traders out there, right? It's a really good tool for that, right? We went over this before a couple of times with Yahoo. We don't do it all the time, but it's a great assessment. So kudos over Brandon, definitely bringing that back to the forefront, because these are just things that you can, that helps you add another layer to your your research methodology, right? Again, going back to some of these old, these plays that, potentially offer great opportunity for us in the future, because we know markets are getting ready to pivot. Again, it's the same, perspective how we should start looking at the markets, right? So we saying value plays. What are some of the value plays to look for? You can definitely begin to let your fingers go to work for you now, right? Look what Peloton stock did. Peloton stock, look, it's getting taken to the woodshed, right? It had this moment. It's not backpedaling anymore. This stock, man, look, what's Peloton sitting at right now? It's down $24 a share. $24 a share. How excited were people about Peloton in 2022? Excuse me, 2020, I'm sorry. Super excited, right? Everybody flooding in. Again, overstayed their welcome. For those who still sitting there thinking it's just gonna shoot back up all of a sudden. You're like, bro, we knew this was gonna be, short-term use case, right? People at home sitting in the house, chilling. Yeah, buy this expensive, let's work it out. I can't wait to get back into the gym, right? Y'all know people like to be interactive in the gym, whatever, right? For the most part. So how you see the markets, as well, right? So we won't be confused, right? Going forward, we know what we're looking for here, right? Because our biases, again, are just they're pretty much, non-existent here, right? So you got the Kipling report. Kipling puts out a very expansive report. They're kind of on the level, Morningstar maybe a little bit more intricate, right? The next level, we're talking about really, really good announcements. People like Moody's, right? Moody's assessment, but Kipling's kind of one of those top ones, right? So if they put out publication, you better believe it's somewhat very well researched. So their publication came out on 21st of December, the 15 best value stocks to buy for 2022. Now, they knew that a lot of these things were already in play, meaning like interest rates hikes, quantitative easing reduction. They started to put all that stuff into place. They understand inflation. You see, they got that already, in some of their report, right? The initial assessment, right? They're already putting this stuff into play. Look here. They got lows up here. Now, this is, again, you have to go out and do your own research, but you'll see what they might be going with. This lows, KKR and company, right? People are like, what is that? Who is that? Right? But look at their PEs. They got a PE of 17. Lowe's got a PE of what? Probably around about, look 20. Right? Comcast. Netflix. Look at their PE. Comcast got a PE of what? 15. What's Netflix PE right now? Anybody? Do you mind know what Netflix PE is? Do Netflix pay a dividend?
No.
And they got a PE of what? Somebody look that PE up for Netflix real quick if y'all don't mind. Comcast pay a dividend of 2.1%. And they have pricing power. And they have old money. And they can move into this space and move things around a little bit. And they got not just one a pure play on streaming. They got internet, voice, TV.
Netflix dividend is 0.
And what is their PE? They forward PE.
The forward
PE.
Man, 1,470.
Excuse me, can you say that again, sir?
1,470.
I don't think they heard you. I'm sorry, sir. I'm sorry, I got the earphones on. Can you say that again, sir?
1,470.
Y'all know the 1,470 PE looks like? That means this company is being evaluated for that's rough about near 10-year plus growth forward PE. Meaning they got all their money today and a one lump sum lottery payout, and they didn't do the annuity payout breakdown.
Oh no. I'm sorry, guys. I'm sorry. That's the wrong one. The forward PE is 39.6. I'm sorry. I was reading the wrong PE.
I'm like, woo. It used to be up there in the thousand. I'm like, okay, it must be what pre-earnings
yeah, that was pre-earned. Yeah, that was for price earnings forecast this year.
So around now sitting at what? You say it's what sitting at 4P, sitting at what now? 39?
Yeah, 39.6.
So in the streaming environment, again, Comcast sitting right here, sitting at a what?
Good 15.
About half, right? Less than half, right? Couldn't make this stuff up. And again, Netflix used to have a 4 PE up into, they in the thousands, right? Some of y'all know that when they were sitting up, then they're $700 a share. Look at FedEx. What's their 4 PE? 12. The industry standard for what? Shipping companies, the PE is sitting at around about, as of today, they sitting up there near what? I think what, 17, 16, 17, 18, maybe 20 plus.
What's a healthy PE ratio between what, 12 and 17?
It depends on the industry. That's why I say, so when you do an industry PE assessment, because you could type in query just like that. What's the industry PE, forward PE for, shipping, right? For, telecom, whatever. You can get a lot of those kind of raw data points through that level of assessment, right? And if you value the stock that's probably been lagging because of, other reasons, supply chain issues just out there, eventually they're going to work that stuff out, right? So they've been treated like a redheaded stepchild because it hurts them most, and they still got a lot of good management to kind of come into. And eventually they're going to get their feet underneath, and then they'll begin to kind of come back. That's why people trying to run to them now. Make sense? They just trying to price in the potential of them coming back. And they got a low PE because they've been taken to the woodshed a while back too, right? I think FedEx was way up there, right, at one point, over $300 and plus, and it came all the way, down to ground zero down there, right? Just real quick, look at there. What is coming right here? Who is this right here? Electronic Arts. EA Sports, it's in the game. Y'all know them game was out there. Don't be get out quiet now. Them game was at Activision Blizzard just got bought out by Microsoft. Who will make a play on Electronic Arts? Y'all think it's coming at some point? How expensive is their catalog, Electronic Arts? What are some of the games that Electronic Arts makes? Anybody?
Well, all the Maddens, all the 2Ks.
Madden.
They make the Maddens? Yeah. How much of a collection of the Madden games now since John Madden passed away? Remember there was talks about they're making Madden games, NFTs?
Mm-hmm.
Collect items now. Licensed and controlled by Electronic Arts. If someone wants their catalog, right, the engineers, buy them up. What's stopping Sony from doing it? What's stopping any kind of game console out there from doing it? Hey, what's stopping Atari probably from doing it, right? On Nintendo, right? Buy them out. Microsoft just did it. Forbid Microsoft makes a play on Electronic Arts, now they monopolize. Ooh, boy. White House wouldn't like that, right? Monopolizing 18.74 PE. They even pay a dividend. How about that? As bad as it is, but they've been left for dead, right? Meaning they kind of had a heyday when COVID was popping because everybody sitting on playing, video games. Look right here, see, to begin with, the gold standard. See right here, that right there stands for something right there. To begin with, it's the gold standard for any sports games, with titles such as FIFA. How big is FIFA soccer? Madden NFL, turning up steady cash from their annual releases featuring each year's players, right? Meaning whoever these little people are in the football industry, right? These, what they call them, franchise and all this stuff when they paid a little I forgot what it's called. God, that's been a minute, right? these future scenario, when you look at it in the futures, whatever. Yeah, I forgot what they call them. You know, Battlefield, Apex Legends, all these kind of stuff. Y'all see the games, whatever. Right? They're projecting earnings will grow 20% this year. Then nearly 10% next year on top of that. See, if they putting out projections like that 20%, we just talked about if we could just figure out how to get what? 3%. Meaning that's an overassessment. If they overrun that, that's gravy. Biscuit wheels, gravy valley. If they undershoot that, they hoping it really landed around about what? 15, 14%. They'll still be happy with that. Y'all get where I'm going with this, right? This is assessment in terms of what people looking at for assets that they may be trying to play, look to play into, given what the market finna be a little bit more a little bit more stingy. The market crashed today. The market literally crashed in the back end of the day. What stock went up today? EA Sports. Y'all see the right here? This thing put up 1.44% today. It made dang near $2 a day while the market was crashing. Hint, hint, wink, wink. So let's go into 2023. Case study. We're going to get ready to wrap this thing up. Case study. Let's see what people planning for what? The future on what? EA Sport. There it is. Somebody about 182 contracts today. Open interest on the puts are higher than that of the call, but I'm pretty sure that's going to bounce out at some point because they starting out to buy the calls. Those calls that they buy intraday will obviously fold into the category of what? Open interest going into the next day. That's how it works, right? From intraday to what? Open interest. The ideal of this is starting to kind of take shape. Again, the asset now sits at what? $138 a share. Literally in the money, which is a 140 because there's no 138. Or you could do a 135 deep in the money. That's going to cost you about $2,000 for that contract. If you say yourself it has a 20% multiple on its future growth, well, what's 20% of 135? Anybody do that math for me really quick? Just quick assessment stuff, case study stuff to start looking at, guys. How to better query for opportunities in the market. What's 20% of 138? 20% of 130, well, we'll say 140, right? Since, it don't have 130. So what's 20% of 140? 20% of 140. Somebody give me that math really quick here. 20% of 140.
I got 28.
So that's $28, right?
Mm-hmm.
So what's 28 plus 140?
168.
168. There's no 168. There's only 170 or what? 165. Those contracts now going for what? $8 a contract or $7 plus a contract for a whole year. Meaning, again, this is your money market account on steroids with the potential to gain at least potential, 10%, 15%, potentially even what, 20%. And if you very, very fortunate, somebody come buy your company out, right? Because their competitors got bought out. Somebody come buy them out and the stock, go to baby like 200. That's your savings account on steroids right there. Money well preserved in a position to what? Go to work for you. Case study, not investment advice, only a case study. You guys with me? Y'all follow me in this?
Mm-hmm.
Is it making sense to you guys? Seriously. Right? This is how we assess.
Yes, sir.
This is how we assess this stuff. This is what people just sit around and do. These jokers ain't playing around. They're trying to put their money to work. Right? They ain't blowing it. They're just on it. This is how you say, okay, long term, I'm with it. It's better suited here than sending money market account collecting dust on a coffee can or in the ground in the backyard, right? Somewhere. It's all mentality. That's 20%. Some people don't have the patience for that. So just teaching you how to do that. I mean, you could be also doing other stuff in the market on a day-to-day basis, chasing earnings, doing whatever you do. If you got the time allotment and the strategy and the patience and the discipline to do those things, outside of that, this is also how you start to implement that cash out of some of these overbought stocks that did well, high growth stocks that did well. rotate some of those gains into what? Some of the undeserving plays. Not saying this just from the law, I'm just using it as a case study. You have to be better at assessing what? Risk now. Finding low risk opportunities now that have the potential to become what? Greater risk in the future. That's a good thing because greater risk from low risk mean what? It actually appreciated in value. Get excited. Huntsman. People probably know what they're coming to. Huntsman. What's this? Huntsman? Right? What they do, right? They pay a 2.3% yield, sitting at 9.24 PE. Sitting there at $31 a share. Right? Very, very low. One of the major competitors in their space, DuPont, right? DuPont, Nemours, right? They got a what? A PE of what? 18. This company got what? Half that. See, it's like that kind of, see what I'm saying? Let that marinate for a moment. United Therapeutics. I was in the healthcare space. PE sitting at 13. Sitting at 13. $200 stock though. But it's probably what pulled back from probably some what bigger prices at some point. And we know healthcare is a good what? Inflation hedge, is it not? When is it ever not a need for healthcare? It's a revolving door. Y'all know the saying. If the hospital was in the business of what? Curing people, they'll be out of business. True story. Come make this stuff up. Neurological, cardiovascular diseases, they're in the transplant-related treatments. All the right there, that spells what? All that right there mean money. To Wall Street, that's money. Again, we can go on and on. Global payments, there's many of them out there. This is just a list that this company put out in terms of their stuff. Global payments, right? Of course, that's, self-explanatory global payment system, software solution, stuff like that. Clearly, PE sitting at 15, forward PE that is, right? Probably down in the dump at this point. It's probably, needing a new lease on life. People starting to look at it potentially, possibly. Right? Uh-oh. Who that company right there is? Who that company right there? Who that? Where my Louisiana people at? Where you at, Sister Mom? Who that? Who that talking about them Saints?
Whoop, whoop.
Right? Look at GM. Now we benefited greatly watching Ford go from $4 to what? 25. We were every bit of watching that thing happen like that, and we talked that up when it was at $4 a share. General Motors in the same in the category now because they got what? An expansive catalog to turn most of the majority of all their vehicles into what? Electrical vehicles. They got a PE of 8. A Ford PE of 8. They're not Tesla, of course not. But they have every bit to be able to capture market share because they have what? Brand recognition. So, now, y'all know, like they said, if they cut reparation checks tomorrow, how many people are going to be riding around in the Escalade?
Everybody.
How many of them going to probably think to get the electrical version as opposed to the gas one? Just like, hold up, brother, for you about to get the one, the electric one. Get the electric one, right? Hold up, get the electric. Expansive catalog, they can turn a lot of their vehicles into electric vehicles. We said that about Ford. That's why it made a good use case at the point we were saying, okay, they're in the EV space, they got the money to invest, they got old hundreds. When we talked about that, and it went from $4 to 25. Couldn't make this stuff up. And of course, people benefited off a lot. Hats off, Sister Monica. Hats off, Sister Monica. Took them leap forward calls and sat on them. She sat on them. She was saving that bacon. Right? Rainy day scenario. Okay. We're going to do this a little bit and then we're going to get on off here. Let's put in GM real quick here. Let's see what people think about the future of GM. They mapping out this stock a year in advance already for tax purposes and everything, right? People ain't playing. Let's go there. Sitting at what? $54 right now, a share, right? So we're gonna go in the money. Obviously, they don't have a 54. We'll just say 55. How much that contract cost you for a year in the future for GM?
$800.
$800 a contract. You got $800 in your savings account right now collecting what? Mold, mildew, rising, bruh, anthrax. Put that money to work. Not saying this not invested by. I'm just saying thinking like what? An investor. Do you guys believe GM has the ability to gain market share in 2023? Excuse me, into 2022, based upon their EV goals and initiatives and plans that they plan to do with the EV space?
No.
Do y'all think GM gonna be at $55 on December the 31st, 2022? Anybody?
Yeah, I do.
You think they're gonna be at $55 at December 31st, 2022?
I think they'll be either around it or above it.
No, it's at $55 basically right now. So you're saying they're gonna make no money, no growth in 2022? Is that I guess I should pose like that. I guess.
No, I was saying because based on the ups and downs, but because at the same time when you had talked about the chart, I was looking at the GM chart, and I was looking at from 2014 all the way to now, and how it spiked and went up, and the times it went down. And right now it's on a rise based on it. It's an open opportunity, an open market for it to do a whole lot of stuff. So that's why I was just saying, if anything did go wrong, it'll be about a little bit over or a little bit under 55. But if everything could go right, it might can go up to 100. You know, you never know.
So you're assessing risk. You ought to say, do I see this company having potential growth? If not, it's not going to be worth your time assessing it, right? So you say to yourself, based upon the rules of engagement, in terms of the EV space, comparing the competitive value within it, in terms of obviously where they came from, because you did the right thing. You went back and looked at where it was before. Now, is the business model that they're professing with this new lease on life, granting them the ability to be able to gain market share in the, what they call the duality space, because they deal with cars that still use gas and gasoline oil, but they also have the ability to convert those vehicles into electrical vehicles. And we're dealing with a president that has on the table? Clean energy initiative, right? They instantly getting government contracts to produce electrical vehicles. They're getting government money. How important is it if you can get government money? See how that works?
Government is the only corporation that don't have competition.
None. Ford and GM finna get all them contracts that they really should have went also with the Tesla, but they annexed Tesla because they don't deal with unions. See how that works? Wall Street knows this. That's why this is one of the value plays going into 2023. Couldn't make this stuff up. Not making it up. And it's not rocket science. Convince me how y'all can make those assessments too. And we talking about in the money, that's a glorified savings account. That's what I call them, glorified savings account. When you buy a leap, that's essentially what you're doing. Couldn't make this stuff up. Again, y'all not do square that inside your head, right? Y'all know exactly what we mean when we're saying this stuff. Last year, it went up 38%. Last year was up 38%. We'll see. Graphic packaging, right? 16.9% forward PE, or excuse me, 16.9 forward PE, not percent, forward PE, right? Holding company, design, packaging, graphics, all that, of course, in the name. Just moving through, right? Just moving through. They already did a forward PE guidance for 2023. The company's putting out a 20% revenue growth for next year, essentially this year. This is the company's putting that out. I mean, they're gonna have to go hit those numbers. 20%. Stock sitting at $18 a share. Again, it's the same mentality, guys. It's the same mentality. No matter how we square this in our head, a lot of people are going through these websites, figuring out what these little potential value plays at, and they're trying to move into them, right? Let's look into the future. Let's see if they ain't even got 2023 contract out, so this thing can probably be a gamble squeeze if it's really about that life, but it's not probably do a gamble squeeze, but it's probably gonna do a little something strange for a little piece change at some point. Look, they ain't got no contract action, none. But look, the $20 contract sitting there is wavering because ain't no buyers there, but it's sitting there at lower 35 cents to what, 240. The 250 put up 86% today. 17 sitting at about $1.70, $2, $3 a contract, somewhere in the midst of that. It's all crazy, right? Meaning it ain't getting no traction now. Possibly in the future, maybe. It's crazy when we start looking at this stuff like this, but this is how you do. I just sit around and do this stuff, and just go through stuff. This is expanding your knowledge bank. Ford, PE, Columbus, McKinney, right? We heard of them possibly. I mean, going on, Mass Tech. Now, this one here is interesting. Why? Because it has to deal with what? Where you at, Open Brandon? This one here, we already went through Mass Tech. For what do Mass Tech deal with? Y'all see it already in the picture. Say it again.
Infrastructure.
That means they got a check already cut for them. Already. 16 Ford PE, they ready to rock. Always need to build something. Always need to construct something. Always need to what? Improve or repair something. Mass Tech, one of them players. They finna benefit. They're definitely gonna benefit. Right? See, they're already what? Touting it. It's easy to understand recent buying spree at MTZ on the heels of a $1 trillion bipartisan infrastructure bill signed back in November.
Hey, but look at the chart real quick.
Let me see if they have one set up here. I might do it through Kipler. They should have it on Kipler too. All right. So let's go to the hourly chart. All right. Let's go to the hourly chart. Let's do the other daily, excuse me. So look where it's at. So double topped up here around 120. There's your what? Cut bottom, tall and starting to build itself out, or fry pan bottom. So far, you got a support sitting at 84. It's sitting at 90, roughly about 6 points off there. What? That pivot support. And it's going into the new year like, okay, let's see if we can do a little something strange for a little piece of change. Right? You kind of seeing what's going on here already, right? You got your check down levels. You got one sitting at 83 here. You got something sitting at around, down here, this little pivot point, $80. Even if it even correct down there, that's probably going to be more for probably Wall Street to get all excited about it. They just like an idea that has $1 trillion, what? Packers sitting out there waiting to get that money dispersed to them. Because they're going to provide an actual what? Service, right? And building back, whatever. I mean, we do this stuff for days, right? We do this stuff for days, right? But again, I'm just blowing through this, then I'm going to get off here. But I'm just really kind of getting your creative mindset, working for you. Because again, the title is just what? 2022 game plan, market pivot. You're going to have to find money in places where it wasn't as easy as it was in 2020 and maybe even possibly 2021. We're equipped for it. We're ready for it. East West Bank Corp, 12 PE. Right. And on and on and on, right? Encompass Health, right? There we go again, them healthcare plays. Some of these biotechs that's waiting to break out, some of these healthcare plays, some of them ready to break out and get it popping too. Right? No secret out. MKS Instrument. There we go again. 4 PE. Right? I mean, again, you can go through this stuff, put in your own query, find these things. You'll have an endless query to just find stocks and cross compare analysis of them. To the point where you can fall asleep at the computer. I've done that many. I be in there. I'm going down with a fire. I'm gonna still query stuff, but I'm barely eyes open, falling down in the chair, sleeping all the day. I've been through a lot of nights. Boy, I'm gonna force this thing. I'm gonna force the information down my throat. Fall asleep right in my little office and be sitting at the desk like laid out. Laid out, man. 3 o'clock, wake up like somebody tap my show, like the market guy. Hey, man, about to be close to market about to open at 4 a.m. Wake up, wipe the cold out. You be right on investing.com and see what the future looking like. I'm gonna get me a day trade early. I'm gonna catch me something. Again, everybody different, but that's just a willingness to want to be a top of the information opportunities. We ready for this. We built for this. We're gonna learn. We're gonna expand. We're gonna hit a lot of different topics this calendar year. In the training, we're gonna expand into getting everybody kind of those who really want this. Of course, that's how it got to work, because we can't force feed this on to nobody. It's all about your own individual want or yearning to be better in this. That's how this stuff works. It's an individual sport, even though we have a team collective effort, right? Because we are a think tank. We are a think tank. Hate, like, love it, indifferent to it. We're a think tank. A lot of bright minds on here. Come together, form Voltron, help each other when you can. That's what's gonna make this great. Because again, we realize that the market, again, it's, as they say, it's not an exact science for a reason, right? It's not an exact science. It's about what? Variables. It's about what? Business. Y'all know business, it ain't personal, it's what? It's business. That's why your positioning, how you look at any asset, should never be personal. Remove your emotions. It's not about your feelings. It's about what? Being able to make them dollars turn up. Want to see a magic trick? And this ain't nothing in it. Give me a good trading thesis. Guess what happened the next day? Where them dollars at? Where them dollars at? Best magic trick ever. Best magic trick ever. Again, you turn $1 into what? 500. You turn 5 into 250. Best magic trick ever. Right? 100 into 4,000. Hopefully the market hold up tomorrow. That's what we get in Netflix. Right? I'm just gonna buy me some fishing lures. That's all I'm gonna buy, some fishing lures and put that money to work on the other contracts. Like we've been doing. Ain't nothing changed. It's all relative at the end of the day. We in it to win it. So each individual assessment going forward, because we still getting around to everybody for our 1 year analysis. Focus on really testing yourself this year. Focus on really testing yourself. Focus on making better what? Disciplined decisions this year. Focus on, getting outside your comfort level and challenging what? Better strategies and opportunities within the market too. By using different strategies, is my point, what I'm saying, right? This is already a blank check. Why? Because we know the markets are finna go through somewhat of a what? A shakeup. It's already starting to happen. NASDAQ is sitting at what? Already in what? Corrective territory. The QQQs are already what? Basically in corrective territory. Year to date, it's basically sitting, look, it's sitting right at the cuts of what? 10%. But they figured out a way to kind of what? It's actually at 10% because our thousand went down another $2. So we're at 10%. Officially, that means the QQQs are in what? Somebody say it with me. Officially, the QQQs or the tech sector is in a what?
Correction.
Starts with a C. Starts with a C. Say it. Somebody said
correction.
Say it with the chest over.
Correction.
It's in a correction. I thought my screen was sharing. My bad. Let me real quick. It's in 100% correction by the standard status quo. An indice that breaks down 10%, especially in its respective year value off its highs or whatever, that means it's in 100% correction at this point. Tech sector is in a correction. Now it can easily bounce tomorrow and ride out, right? Yeah, for so long. It still got to deal with the piper, right? Because what? Cheap money finna dry up. Fed's finna raise rates. That don't mean it's going to zero, but it definitely don't mean it's just finna return back to the all-time highs like ain't nothing happened. So it has to reckon with itself. It's gonna go through its trials and tribulations and all that kind of movement like this here and all that. It's still got a little bit more depleting to do. All right, let me show you what I'm talking about then. Look at this, look at the chart. Here you are, let's say beginning of 2021, somewhere around it, sitting at 314, right? It's still showing that it's up, 10% from that perspective. This is an exchange, so to speak. Or indices, so to speak, excuse me. But 10%, like that's good growth. And that's at this point, up here at the peak, at 403, that's a whole nother additional what? 10, 12, 15%. So we're talking roughly around about 25+% in 1 year. That kind of growth. It's how you look at growth. We talking about getting a major 3%. Hit this thing up to what, 25? That's a whole lot of 3%. 5 year, don't even forget about it. 2020, look, COVID lows, this thing hit $1.70. It went on to what? Double itself, right? In under 2 years, basically around 2 years, right? Whole 100%. Whole 100%, because everybody fled into what? Fled into tech stocks. So that means if you look at it from this perspective, if you put this on what they call a linear growth chart perspective, when we say 45-degree angle, how much did the stock really supposed to be on the 45-degree angle? Look at the trajectory where it came from before. All right, let me change my color. My bad, guys. Look where it was coming from before. If we just straight line this thing in a way in terms of natural growth progression, that means on a 45-degree angle, it will actually put this stock about what? Right here. That means if it really want to correct and really correct to what we call fair value, it will still have to come all the way down to here. And it's already down 10% now. Oh, it could happen. It could easily happen. I'm not saying it is, but I'm just, if it was a fifth, we all be what? Toe up and drunk. But it could very well much happen. And it'll still be what? At fair value. Ain't that something? Could make this stuff up, guys. It'll still be at fair value sitting at that point, which is rough around about what? See right here? About $300. So that means it still got $61 plus that potentially it can come down to. At least a minimum of $61. Heck, Netflix alone pulling back $100 tonight. Shucks, bruh. That could take another what? $4, $5 off what? Off the QQQs alone by itself. Before we even get to Apple's earnings and what? Google earnings and Amazon earnings and all of them. Right? Before we even get to Tesla. Shucks. Not saying they're gonna bomb, but y'all get my point. They're under pressure. Under pressure. That song, how the song go? Under pressure. They're under pressure. These things are rich. They are rich, richly priced. Richly priced. Right? So we ready for it. 52-week high, 408. 52-week low, 297. See, there we get that $300 point. See, I ain't making this up. There it is sitting there right there. There it is right there. Fair value literally putting it around about $300 a share. Couldn't make this stuff up. Whatever. So again, we ready, guys. Game plan. Again, get ready for the pivot. Invite it. You know, again, challenge yourself, right? To start being more, again, more of an executive, right? In your decision making in terms of your stock portfolio picks and ideas of what particularly could be great opportunities in the future. This is a great time to do that. It's at the beginning of the year, meaning you can give yourself a really fair assessment or market grade starting out like right now. So I invoke and implore all you guys, not even for some of you guys who actually trade with real money, but if you still also, in learning preparatory stage, obviously getting a lot of stuff along, along your journey of learning, get into those paper trading accounts. Start with a certain amount. See if you can beat the market in return value by making good decisions. Number one, cost you nothing, and you gain a whole lot of experience just by doing that. Mapping out what market pivots look like if you were to pivot away from some of these high value PE stocks, growth stocks, and find these low value potential plays that you probably can get in and play, for great gains this year. Again, if you can figure out how to get 20% on the year, look, you talking about awesome returns, 20% a year on a massive diversified portfolio, that's power. And then you figured out how to duplicate that, year over year. This is what we're talking about. This is exactly what we're talking about here. Get on them paper trading accounts, guys. Start setting up you some yearly trades right now. Start putting you some yearly trades together right now. You still got, a lot of time. It's just 20 days into the new year. This is going to be great for you assessing your situation. Get your kids involved if you got them. Get your young adults involved in this if you got some teenagers in the house. Paper trading accounts are what? Literally free. They free 99. Get those kids involved. Get them to realize a lot of things that they're asking you to spend money on for them. how to now start to plan for investments in some of those same things. So they can track their level of growth through making these kind of educated or executive decisions with their money through investments. Seeing who best in breed, second, third, y'all get it. Everything that we talk about here, share that with them in the same way. Pay it forward. Get these kids ready. Stop holding them back. They need this stuff like yesterday. You can teach 7-year-olds this, 8-year-olds this. Right? So that's good energy to deploy going into the new year. It's going to help you stay on your game too, because you definitely want to give your kids the best information. You don't want to cheat your kids. This is a great way to hold yourself accountable to do so. It's going to force you to get them good information. Void of emotion, void of bad due diligence, void of lack of research methodology. You're going to say, no, let's see everything that's out there in this space, anything that we can do to help that situation. All right. Shanika, you had your hand up. Go ahead. You're on mute again. You always do this. You just come right on talking like as if this stuff don't come with a mute. You so fired with technology. So fired. She's so fired. I'm a fire. I'm a fire. And she still ain't hit that mute button yet. You better hit that mute button, unmute button. You're on mute, sis. See, you finna coming in, cutting up, already cutting up. Right? Got a mouthful of gibbet gravy. Right, coming in, eating and coming in with a hand up, ain't ready to get down to business. See, all right, we were just talking about this, right?
Not even sharing, boy.
See, you know, old people take back. Don't you come around about no food you ain't gonna share with everybody. There's more food make you go back in the house with that food. You on mute? You still on mute, man? You still on mute? See, it's Shanika holding y'all up. I ain't even play with Shanika now. I ain't even do it. I ain't even do it. I'm gonna get on off.
Wait. All right, wait.
I'm gonna go. It's late too. I've been a long day. Your brother had a long day tonight. I ain't doing it tonight. I'm gonna go.
Okay. Wait.
You better get it in. You better make it count, boy. You on the shot clock.
Okay. All right. Oh my gosh. Okay. Two people are in here tonight. My best friend Carlina and Arduado, and they want to know how to invest and how to get started and what to do. So I'm not sure if they both are still here or not, but I know they was here before me.
Yeah, brother Eduardo is still here. He's been here for a minute. And you say your sister, what was her name?
Carlina Fancher.
And she might be under a different name, but who knows. But brother Eduardo been with us, for a minute. He's been getting it in. So definitely see him in here. So, and keep in mind, guys, like we do when we do our training sets like this, of course, it's within the course value of the services. But it's also archived on YouTube, so you can always go back and replay this, right? So we archive them through YouTube. Like I said, at some point we'll get to a certain amount of them, and then we'll just kind of actually make them, available for everybody that's actually going through the service, right? But for now, we share it with the fan because we community oriented. We ain't kind of, make people feel like we trying to shut everybody out for this because we're giving a little community over here, right? We give away a lot more than we probably ask of people, and people know that. So we know anytime people come in, like, well, man, what y'all this and y'all doing that, man. Look, bro, we do a lot of community service over here, bro.
Yeah,
and we don't add nothing.
Let's say that again.
A lot of community service here, but before we talking about Sister Monica, but Sister Monica track record in community service, man. Look, it runs around the whole entire congressional Black Caucus.
Brother Chris, and when I told him that, he said, "Yeah, I wanna work with them tonight." So then I sent the link over and I said, hey, it's training, just in case he didn't see it in the other spaces, because I put him in the chat too, and my sister too. So probably a few others made a join or came in and went out, or may catch heat of it, because I know sometimes people you drop stuff on them, but they don't pay attention, and it don't necessarily mean they see it. Yeah. So I beside that, I was just wanting to touch on when you said if you can get 20% out of the market, or figure out a way to get 20% return out of the market. I remember when you was talking about 3%, and I was really trying to get very, very anal with that, so that I can come up with a strategy. Understand. So if you can get 3% from one stock, and you can do that with 6 others, wouldn't that be 18%? Just about 20%.
It's a simple reality in terms of diversification, because again, we're thinking long term. You can have one bull that provides all the the bacon and the beef or whatever, right? All the beef strap, right? Or you could obviously, duplicate that animal, right? And then you have multiple, right? So it's a game of also realizing what the value in that, right? How to use, an opportunity to best serve you by diversification, right? That's the whole game plan about anyway. It's about diversification, right?
Yes.
Right, because they're always going to be laggers and gainers, and weak people and then strong. Again, it's a balance, right? But above all things, you're trying to make sure within that you kind of have that kind of level of action, right? You kind of up and down, right? But everything can somewhat have a sequential value of what upward movement. Make sense? And that's how you can end up with an 18%, 15%, or 20%, right? Again, it could be one bare weather opportunity that you really have to babysit, because if you put it all in one, then you really gonna have to babysit. As opposed to, let's say you got 3 or 4 that can have the ability one can gain 3, one can gain 7, one can gain 2, one can gain 4, one can gain 12, right? And then at the end of the year, then you have that, that same value of what we're talking about falls to a 3%, right? Per asset value. And then you can still hit those goals. Make sense? Because again, we're trying to figure out how to beat a money market account. Money market accounts right now pay out what? Pay what? They're basically paying what? Peanuts, right?
Oh.
Right? Yeah, and when we talk about money market account, we mean like your money sitting into what? In a what?
Savings.
In the savings, right? And they trying to pay you interest on it, right? How much they paying out right now? Anybody know?
Not now.
That's best way to look at it. Not a nail, not a baby, not a nail nutter. You better not come around with not a nail nutter. What about your employees? What about your employees? What employees? And some of the bank rate ones, some of the more well-founded ones right now are only paying that. I'm finna show you real quick. Let me show you. I ain't making this stuff up, bro. Y'all finna get this work real quick. I'm gonna get off here and go eat. It's been a long day, boy. I've been grinding.
You always say that. You gotta go for real.
That's why I be eating late. 12 o'clock, turn to the gremlin, man. You sleeping right on what? Where you gonna sleep at? Second floor, right on the couch, right? Right? Look here. Goldman Sachs, right? Managed by Goldman Sachs. Marcus, they paying out how much?
50%.
Look at that again. Oh, you said what? They paying out what? They paying what? Hey, what they paying over? You see that decimal right there?
Oh, damn, my bad. I said 50%. Like, my bad. I didn't see the decimal.
But I had a Cabin Candy moment on Django, but now you have my attention by a cigarette. Boy, I'm gonna hit the little cigarette. 50%. I've been sleeping. I'm gonna go all in. 0.5%.
Well, less than 1%.
And that's managed by Goldman Sachs.
That's sad.
Look at AE, American Express, National Bank. They pay what? These are some of the gold standards. Who these the gold standard? Some of the gold standard ones. Some of them, right? Current, right? Lending Club, Community Direct, 0.5, 0.6. Y'all see Pentagon? There we go. Where my military family people at? Where you at, Sister Monica? I know you got that PenFed credit card somewhere, right? Right? We definitely got PenFed over here. PenFed, gold standard in military force credit union. They gold standard, like Navy Federal Credit Union. Y'all know hear about some of these. They're only paying out what? A 0.55%. Right? Could make this stuff up, guys. These are national averages numbers right now. Right? Colorado Federal, Live Oak, Ally. Look at that. Ally Investment. They paying 0.5. Sally Mae. Look at Sally. Sally. Oh, that song goes that whatever. Look at Sinking the Bank. Sinking the Bank deal with a lot of you guys financing when you're doing dental. They do all that kind of stuff. Sinking the Bank is the lending agent for them, right? They paying out only 0.5. Go ahead. Somebody say something.
Yeah. So wait, that annual APR is when is the annual percentage rate? That's what is a dividend paid out.
That's what they paying on your money. That's what they paying on your money to sit in their bank in a money market account.
Oh.
0.5%. 0.55, 0.6. And then it ticked up some since we know interest starting yields are starting to go up. I guarantee you, like maybe last year, December, November, it was less than that. It's just that now we know that rates is getting ready to kind of starting to go back up. they've been slowly inching back up because they follow the national average of the treasury, right? And we already know how to do that on the treasury.org site, right? We went over this many times how to go check interest rates, right? These are national interest rates that you go to the Treasury Department, pull them up and see what the 2 month, right? Y'all know the whole name. 5, the 2 year, the 10 and the 20 and the 30. You can go check those interest rates in real time. Then you see the inflation that they put on the course or negation of that through these ancillary services. But you can track all this stuff yourself. All right. I mean, I need the raw number. Look at that. Verizon Bank, CIT Bank, they went down. They only paying 0.5. Look at the Capital One. Some of y'all got the Capital One credit card, boy. They ain't paying, boy, they ain't paying y'all nothing over there. Discover, look at Discover, 0.4. And again, we go on and on today, but y'all get it. But again, can y'all, I'm just asking a question. I'm asking for a friend. I'm just asking for a friend before I get off here. Look at BMO Harris, right? I did BMO Harris a lot on some of you brokerage account. Look at BMO Harris. They only paying 0.35. They suck. They got what? A 1.5 star. They ain't got a whole, they got a whole half a point. They ain't got nothing. 35. I'm just asking for a friend. Could you guys put together some brain cells to beat a 0.35% return on a 1 year fiscal calendar session? Anybody? Can anybody beat 0.35% in return on their money in a whole year? Anybody?
You can do that in a day.
Yeah.
I'm asking for a friend. Can anybody beat 0.35%? Anybody? Somebody come and even ask for a minimum balance. You got to have $5,000 in this account even to get their little 0.35%. Boy, ain't that insult to injury? Man, that make you want to go down to BMO Harris, slap the executive in the mouth with a bag of bacon. Like, bro, you out your mind. I'm going to put $5,000 in here to get 0.35%. I'm going to go open to the Robinhood and pay 0 commission and go all in on Junebug, Express or something. And all I need them to go up and come down and still be up more than they did. They're going to beat your account. And they charge no fee. No pay. Bank want a whole 10 racks. Bruh.
How exactly does that work for, all right, what's going on with that?
It's a money market account. So anytime you open up a bank account, some of these banks that you open up, you're doing business with, because that's basically what happens when you open up your money market. They charge you service and fees to access their credit lines and accoutrements that the bank may offer, programs, whatever. Some of them also will offer opportunities where you can incentivize your money and savings, right? You put it in savings, they already borrowing against it to loan it to people for capital, whatever. So they paying you kind of like what they said, like a staking fee. That's what crypto does in staking, right? In a lot of ways, right? They're using your crypto and they paying you for what? For being able to use your digital energy to accessorize to other people. Then they put it back, with interest, right? This is you using fiat currency. They take your fiat currency that you put in there and they say, okay, well, if you leave it in our bank, for a full year, we'll pay you 0.35% interest on that money. Why? Because we're going to loan it out to other people, right? Do projects with it, this, that, and the third. And we feel like we can just, you owe that much because the national average is this amount. So we're going to pay you this much. Knowing what y'all know now in terms of investing and trading, I asked a very simple question. How hard is it to be able to figure out how to get 3% out of a market on a full 12 months? How hard is it to find 3% growth in the market on a whole year timeline?
Oh, okay, so then you do what we was doing the other day on an account or with a company that is giving the percentages back on an annual percentage yearly rate like we was doing yesterday, right?
Just going over the idea of finding stocks that can provide you at least a minimum 3% return on their stock price in one whole full year.
Okay, and this is how you could tell because of the annual percentage rate on the money that they look.
This is on the money market. This is you doing it just opposed to a money market account. So when we say money market accounts are trash, when you hear people say make the saying like cash is trash, right? Ray Dalio, that's one of his favorite sayings. Cash is trash, right? Why be in cash? Well, this is what they consider to be being in cash. If you're sitting in dollars are being diluted right now, right? Meaning because the feds are printing a lot of them, right? It ain't worth the paper is printing on. It ain't really. And they still, so the interest that they're going to pay you 0.35% on your money sitting in a savings account. Some of them got introductory values that you have a certain amount in there. Right? Look at these people need. Look at Apple Federal Credit Union. They want you to have a minimum of what? Or 25,000 in their account, and they only gonna pay you 0.25% on that money.
That's crazy.
Slap them in the mouth with a bag of bacon. Don't insult me. Don't even insult me like that.
It's crazy, but that's where a lot of people feel safe with their money.
Some do, because it's another form of a bond in a lot of ways, right?
They feel it's like the market, doing it in the market or putting it in the equity is like taboo. And then to go get 0.5, they feel like they safe.
But again, now this is for people who got big money though. You see what I'm saying? Because if you think about it, we talk about the same thing we would talk about like for the dividend, right? If you got $100,000 in liquid cash that you got sitting in the money market account, even at 0.25%, right? Of course, you wouldn't use a 0.25% payout. You'll find one that actually pay a little more, at least a gold standard like 0.6%, right? So what's 0.6% on 100,000? Somebody do that math real quick. What's 0.60% on 100,000?
$6.
On 100,000.
Oh, on 100,000. 6,000.
So you say that's 6,000 on 100,000 at 0.60%?
60% time.
No, 0.6. Look at it. See, boy, I love do money. I love doing business with Sister Shanika. Boy, she be giving away money, don't she? That thing is bigger than you got a big old decimal right there at 0.6. She's still trying to make it 60%. I'm gonna get paid doing business with you. Matter of fact, let me have my secretary give you a call tomorrow, man. It's a good time tomorrow. Let's do some business, man. We'll give away money, but guess what? We're gonna clean that up, and we're gonna clean that up this year. We're gonna clean all that up, so Sneaker, don't even worry about it. I got you. Right? We're gonna make you a goddamn math machine, boy. You're gonna run circle ride juggle, right? Dealing with them numbers. Right? We talking about 0.5%, right? So put in your calculator 0.50% times 100,000. And let me know what you get.
50,000.
What? How you go? Oh, you did 0.5. I said you did 0.6. I got scared for a minute. I was like, hold up, sis. Hold up, big swole up. Right?
50,000. Move the decimal 2 places.
You said 50,000?
No.
It's 50,000. 100,000 times 0.50 is 50,000.
No, not 0.50.
What?
0.50%.
Let's get paid, sis.
You got to add another zero.
Move the decimal place 2 places to the left.
I'm gonna get all sorts of Shanika money. Don't worry about it.
I got to move. Oh,
right. Take it to the cleaners.
Oh my God.
100,000 times 0.5%.
Move the decimal 2 places to the left.
That's 500. $5.
Say what you said.
Think about it. That's only what?
What is it? $5?
Yeah.
Okay, let me do it this way. I'll make it easy. What's 5% times 100,000? What's 5% times 100,000? What's 5% of 100,000?
5% of 100,000 isn't it 5,000?
No, it ain't if. Math is the exact sign. You know I'm gonna do that for you every time you say I think it is, because math is an exact sign.
I'm gonna knock it off. All right, hold on.
Right? So give me an exact science here. Give me an exact sign. What is 5% of 100,000?
5% times 100,000. 5,000.
Say it with the chest. Say it, because math is the exact science.
It's 5,000.
So if you do 0.5, that means you're moving the decimal over what? Another place to the what?
Another place. To the right.
Right? From the back, right? Oh, go ahead, somebody. So what's 0.5% of 100,000? That means you're removing a what? A zero, right?
5% of 100. I got 5,000, and then I'm moving I'm moving to 2 decimal spaces on the
Stop
5,000.
playing so sneaker. We ain't finna do this. I just gave you a short version. We ain't finna do this tonight. I gotta go. I guarantee you not. I'm gonna cut the bike. I'm gonna drop the bike and walk off the stage. They're gonna do it tonight. Not tonight, sis. I just gave you the short version. If you got to move the decimal over one whole place to integer to the what? To the left, right? Because you got a 0.5 as opposed to a full point, right? So we just moving that integer over one decimal. Basically, put it this way, you're removing 1 0. If we remove 1 0 from 5,000, that leaves you with what?
Just don't trust me right now.
If you take away 1 0 from 5,000, that leaves you with what?
500.
So if you got $100,000 and they paying you 0.5% on 100,000, that means they pay you $500 in interest. That's still what? Money though. Don't get it twisted. Like Sister Monica said, that's still money.
Yeah, it
now,
is.
That 100,000 in y'all pocket, boy. Oh boy. Oh boy. And we talking about 3%.
We're not even talking about fees yet, though.
Right? You know, and that's if they definitely got fees and all that stuff right there, and see no minimum balance, but fees on top of that too. You're 100% right. See, right? They got a promotion going. What? No monthly fee. See it down there in small print, but they think they slick. They think they slick in the can of oil on Sunday. No monthly fee.
You know, this is the campaign that been running through the HBCUs now. Somebody finally got in their ears of, instead of leaving their funding sitting in a regular account, to put them in endowment accounts to invest. And it was crazy. Listen to trying to convince our HBCU to do it in the chapters, because they really, you know, some people like, no. And then it was just like, yeah, we can get more interest, you know, like,
because
that ran through 2021. A company was going around all the HBCUs trying to convince them to, you know, because that's pretty much how the PWIs are doing it and making more money.
Why? Because you cannot live in a low interest rate environment and you won't have enough alumni to continuously go infuse that money for the future, you know, generations to come through the, you know, the school to grow it. You need another interest accrue and opportunity to kind of help, you know, grow those funds.
Revenue, correct. And that's like one of the biggest issues. They're not to grow their revenue. So a lot of times they get passed up on donors because they're like, okay, how are you going to sustain if I donate to you? Like the lady from Amazon, well, you know, his wife,
right?
Who was giving out all that money
to the black HBCUs.
To the HBCUs, correct. So if you're going to get 20 million, you know, they're the one that like, okay, if I give you 20 million, you're going to come back to me 20 million again next year, or you should have at least take some of that and learn how to grow or to duplicate or to capitalize on it instead of packing salaries. Yeah, instead of packing salaries. So
because it's already came to you in a gift endowment anyway, so it ain't like y'all had to come out y'all pocket. A third of it automatically need to go into investment portfolio.
Automatically.
Everybody can track. Automatic.
Right.
It could be whatever. It could be the spider. The spider turned out 30% last year. That you know, roughly 20 million per se. 3% of that is what? Let's give me 30% of that is rough around about what? $6,000, right? Little around close to near $7,000, right? Excuse me, 7 million. Excuse me, y'all. I'm be a long day. Close to about 7 million. So what's 30% of, let's say, you know, we'll just say 6 for the 6th day. What's 30% of 6 million? Anybody? What's 30% of 6 million?
1.8 million.
Well, you know, you're dealing with a whole number value there, right? Because you got 6 million, you got 3, right? It's divisible, right? It's a divisible value in that, right? So it's rough around about what? About 2, right?
Oh,
right. Yeah. Full 2, right? You talk about what? 2 million. That covers fees, that covers power bill, that covers alumni. You know, they need a lot of stuff in the school right there, and that money is not working for the school, and it ain't costing nobody nothing.
Yep.
Jokers don't want to deal with that. They want to play this game of, no, we think people got, this is just my opinion, guys. Don't y'all come for me when I say this here. A lot of people still got that church mentality. They haven't figured out how to put their money to work for them in a way to get a fundable return because they feel like they just got to keep going in their pocket. If smart people are sitting in the place that will collect this money, know how to put that money back to work for the community properly, it won't have to feel like they're fleecing everybody every other day, or people making people feel guilty that they got to continue to keep pumping money into it when we can already have a good block of money in there and it's working for everybody now. Collectively, everybody still got skin in the game, and they don't feel like you got to continue to keep going in your pocket because now it has growth potential. Make sense? If we got into the mind of investing like we're supposed to, especially as a people, it'd be game over overnight, essentially. But jokers don't feel like they don't want to put in the work. They don't want to learn. They want to call everything a scam. Everything is this. But nobody have a clear game plan how to put people back into a place of prominence of a growth perspective void of a middleman, Mr. Charlie, a system governance, this, that, the third. The only thing that affords you that is what? Real estate, investment asset ownership, or again, you the late nephew of some, again, Chateaubriand heir somewhere. Good luck with that. Your options are limited. And you finna come into some kind of form of what? Exemplary growth just overnight because you done went to school, got 3 or 4 degrees, and all of a sudden you're gonna walk right out of graduation into $1 million job with what? A gang of what? Student loan debt. Stop playing.
Debt. Oh, look, that and the credit cards, because they got those.
Loaded. And they still feel like, oh, I'm ready. I got everything I need to go into life. A whole lot of debt and a whole lot of pigskin paper that, yeah, about that. It's just other ways to look at opportunity. That's all I'm saying. And this is not a swipe against any of those things. I'm just saying people are getting smarter as the years are progressing. You're supposed to get smarter. The goal is to work smart, not hard. I repeat, the goal is to work smart, not hard. If people cannot really figure out how to use the most turnkey business model to their advantage in terms of investing, because this is the most turnkey business model on the planet. Is it not, guys? I'm not saying that for y'all to agree with me like we're in the church. This is not an amen scenario. This is just based upon the reality of what y'all experience since y'all been in. Y'all tell me how y'all feel about it. How do y'all feel about it? Is this hard to learn how to do this?
No, and I've definitely made more money doing this at a quick pace than I did in, I say a startup company. I made more in this from a startup position than I did in a company from a startup position.
And again, I always ask this question. Y'all know one of my favorite questions. What's your overhead in this? What's the overhead?
A couple pencils. Let's see about nothing really. I mean, probably less than $100.
Ethernet connection.
You got that anyway. You already got that. So
laptop, cell phone, desktop, or tablet.
Yep. If that. Yep.
YouTube, Google,
right.
Discord forums like this.
Maybe that's subscription. Maybe probably less than $300.
And some initial capital to get what? To go to work.
Yo.
What's your liability? Whatever you put forth your risk mitigation value that you're willing to lose.
Mm-hmm.
Where that church B-roll music at? Why I need to put that church music? I'm talking about that run on, joke all the way down the pew now. Jokers don't want to deal with this. They want to run away from considerably just another extensive opportunity that's afforded to you that doesn't require any personal information about you. Again, don't care if you whatever. However, does not care about none of that. All they care about, can you fund this account? Can you put some money in it to go to work? And we're going to give you some margin on top of that. If you meeting a certain amount, we'll double up on that for you. You can double it up for you. They extended you credit without even, if you can have a 0.2 credit score. Fund a broker account with $1,000, they instantly gonna give you another $1,000 instant credit. Oh yeah, we still gonna beat this money market account sitting up here at Goldman Sachs. Yeah, about that. I'm just saying, Of course, I advocate this because I happen to enjoy the fruits of it that it has given me in my journey for the value that I put in work to be in a position to say, hey, this is another opportunity. That's all it is. I like everybody go through life, look for opportunity. This separates a lot of people out of your personal, because it's just you in the market. No middleman attached here, none. And on a plane, on a train, at the lake, on a boat, on a date, with the kids, wherever, you got access. Long as that market running, you got access. That part. Can't nobody turn your switch on and off when you can make money. Nobody has the power to do that any longer. I'm just saying, based upon looking at your money market account payouts, based upon getting out there trying to, doing a lot of other stuff, trying to, make your way, hey, everything is worth plugging and playing at some point. But guess what? At some point, you also got to learn how to expand those opportunities too, while also pursuing other values in life. It's just another stream of income. That's all it is, another stream. And it can become primary if you learn how to do it right. Definitely can become primary if you learn how to do it right. So that's all we're saying. So I'm gonna end it on that note, because I think that's a good way to end at that point, because we realize this. But that's why I say this is the beginning of New Year. So New Year, new you, right? People got those kind of New Year, yeah, that, right? New me, new year, like that's every year. You still trying to get new, huh? Now, how about we just keep working on what we already been doing and get sharper and proficient at what we already starting to do, right? We don't need what they call a ball up piece of paper, start over from ground one. We already know what we need to do. Why? Because the market teaches you how to be growth-laden mindset anyway, because it's going to teach you how to be better, or it's going to take money from you because we ain't taking it serious quite yet. But again, we just saying how to figure out how to find a measly 2% of the year, a measly 3% a year. You still beating the money market accounts right now. You still beating money market account payouts right now. Let that marinate. That's your standard barometer of standard that you need to try to beat right there. 0.5%, 0.6%. That's your standard. So that's it. So I'll leave it at that, guys. So again, a lot of information to look forward to. Again, this is archive. You can go back and replay this. Thank you, everybody, again, on the YouTube side. Of course, this is our standard, Thursday training session. We appreciate everybody that comes on who, contribute here. Of course, we implore you guys to get serious about this here. Again, we don't want to start market, so we can't sell you anything. Let that marinate. We're just trying to teach you how to better strategize your money to work for you as opposed to you go out there and work for it. And at some point, you got to realize scared money can't make money. At some point, you got to trust somebody or something. Why not trust yourself? Because you're just dealing with the stuff that you already buy every day at the grocery store, at your local, online shopping place, wherever. Figure out how to invest back into those companies that can offer you great opportunity. Guess what? It's a win-win scenario altogether. Anyway you look at it, it's a win-win scenario. Because, forbid if you figure out how to make 3% in the market. Forbid you figure out how to make 2%. Forbid you learn how to make 10%. Forbid you just figure out how to make 10% on an annual basis. Forbid that happens. Oh man, I'm sorry. That's too much to think. Too stressful, right? Just too stressful. Yeah. And that's not even all the asset class. You still got Forex. You still got option derivative strategies and crypto and all these other stuff like that. Forbid you submit yourself to be in that position. What's going on, Oba Stacy in the building? I see Oba Stacy Betts in the building. Our brother P Smooth in the house. Brother Rams, Oba Rams in the building. We see you guys in the house this evening. Of course, our brother, brother Denson was in the building today at Jim Denson, right? Our family, IOR 666 in the house. We see you over there on YouTube. I'm just kind of getting around to it. Forgive me. Our family, Be Humble in the building. Thank you for coming through today as well. Right, following along with us to do our training session on Thursday nights. Right, so we appreciate you guys, and we hope you guys are excited about the new year like we are. And let's go, guys. Let's go get it. Right, let's go get it. Markets are definitely showing their true colors right now. Don't run from it. Run to it. Right, don't run from it. Run to it. Right. These levels are there for a reason. Right. We definitely know. Again, I'm getting ready to go. I got to show this last thing because we haven't shown this. I got to have it on camera, at least nothing else. This right here, This right here, right? Where my West Coast where my West Coast people at? Where you at, Sonny? Put that West Coast voice on. This right here, boy. This right here. He probably lost that. He ain't over Sunday. He ain't got that West Coast voice no more. He ain't got it. He ain't lost it. Right? He don't know how to do that. This right here. But this is what we're talking about, guys. This is what we're talking about. See how we map this stuff out? We mapped this stuff out all before it happened. Boy, ain't that something? Like, how y'all do that? Well, that's magic. But y'all put that stuff on after the fact. I know y'all did. Y'all cheated. Stop playing. Y'all didn't do that before that. Ain't no way in the world y'all put that stuff up there before this stuff happened. That's just cheating. Okay, go back and look at our videos. Go back and look at our past videos and see if we had these lines are. Boy, see how proficient the market is? Look at that. You put that line before it happened. Put this line here before it happens. Look at that. Put this line here before it happened. How y'all do that? That's magic. That's magic. Oh no, that's magic. What's the next level to look at? Gap fill down here. Look at that. Clear as day. 440. Clear as day. Markets also have bull pops and bear market environments. Not saying that we're in a 100% bear market, but we definitely have some corrective energy starting to happen. We know we're in a bear market in tech because they already hit that 10% threshold. But definitely SP 500 here. Woo, woo, woo. Woo, Gina. At some point, gaps got to get filled. Definitely the next one's down to 440. Not saying it's going to go there tomorrow, but hey, it could pop, ping, and go all this back up and forth. They just make some good runs throughout the day. Today was an interesting day. We opened up at 453, hit a high of 458. Now, of course, yesterday's market, was interesting because we hit some lows, right? Of 451. We hit a low of 451 yesterday after hours, right? During midday after hours. And then, we opened at 453 today. And, lo and behold, you see what happened from there. So you made money to the upside today, a full 8+ points. Based by 7 plus points from 451 up to 7 or 458. As soon as we got over 458, I started loading up on puts. True story. I'll post them tomorrow. They're going to be up or not tomorrow, but as of right now, they up nice. They up nicely. And some of them contracts were like dirt. I'll buying one. I'll buy even out the money. I was just being, I was just being a Rambo with it. I'm missing out the money. They ain't even buy in the money. And they was up over 300+% for the bell ring. Like, couldn't make this stuff up. I'm like, bro, when these moments that happen, we talked about false expansion, all you got to do is to be ready to what? To rock and roll when it happens. When it does, understand the rules of engagement, you can get it back. Right? They come right here. This is one I bought literally when we got above 358. I went, I'm going to buy this. I'm definitely hit me some of these puts. That joker right there, up what? 372%. Just playing the top, watching it drop. Contract costs $100. It's up $400 and change right now in profit. I don't care if they pull it back, half of that. I'll be happy with 200 tomorrow. Care about that. More than what I expected, off the play. I'm just playing in the opportunity. Right? We're just looking to get us some opportunity in this market. Let it do all that volatile stuff and go up and down. Okay, whatever. We're not phased. We're not phased one way or the other. And we don't feel like we have to get every aspect, every cent, every red penny. That's not what we're here for. We're here to get our fair share and not overstay our welcome in that share. And this is just for the traders now. I'm going to speak to the trader. That's all. Get what we want, and then we out of there. Right? So we'll see how the markets perform tomorrow. I'm pretty sure the future market probably ugly right now. I'm almost certain. Anybody check the future market real quick before we get out of here? Anybody checked it already? Anybody have checked it?
No, I ain't checking.
Y'all think we red or green right now in the future market?
Green, red.
What you think, so Shanika, red or green right now in the future market? You should probably still figure out what is the future market. I already know she's gonna say you're white. Red. What is the future market? Red. You think red or green, Sister Shanika, red or green?
Red.
All right, there you go. Sister Monica, red or green? She probably can't open your mic, she must be busy. Over Brandon, you said what? You said red or green?
I said red.
Well, yeah, over Rich, red or green? Don't y'all cheat. Don't cheat. Red. Brother Dorado, he probably sleep. I saw him earlier, but thank him for coming through. Thank you, brother Dorado. Hope I'm saying your name right too.
Red.
All right, awesome, brother Divine. I don't know if you open. I know you're late.
Yep, red.
Brother Jermaine, where you at, brother Jamie? I don't know if he's busy or not. He might be busy. It's late.
I'm gonna go with red.
Brother Jeremy,
too.
red, bro. All right, so red. So a lot of reds, right? No greens, right? But no, y'all got no confidence in the market, boy. Y'all jokers. They ain't right, boy. How y'all betting against America, boy? Joe Biden gonna spike y'all what taxes? You gonna put a dirty bum in y'all spike on y'all taxes. All right, let's go see real quick. There you go. Right. Down to 0.22%, 6.65 in what that oh boy, y'all see where SP 500 taking on the chin. Look at the tech. Look at tech. Tech down a whole 1% after hours. That ain't by accident. That's a whole 1%.
Is the bonds going right now?
It must be, or again, if not, you just got follow through. Why? Because what happened tonight? Who got beat up in the tech set tonight?
Netflix.
There you go. Not rocket science. See how y'all put two and two together? Boy, see this why y'all. Oh, this why y'all gonna be, boy, y'all gonna be rock stars. It ain't hard. Netflix took it on chin. That means tech set took it on chin. That means NASDAQ, QQQs, NDX, right? XLK, anything next, tech orientated. They backpedaling tonight. They're trading water. And so again, if tech open up with weakness tomorrow and the dip buys on short to try to save Netflix could easily go under $100 tomorrow. I'm just under 400 tomorrow. Of course, if that happened, bro. Woo, Gina. I sent all y'all a little card in the mail thing, you know, right? That little $100 gonna be well spent. And I only bought one. Look where it's at, outside little aggression band on the daily. Just barely piercing it on intraday. After hours is what? Way down here. Let me squish this down. After hours is sitting down here at 400. Let that marinate. When the last time when Netflix was sitting at that price right there, I'm going to show you. See right there? That's why I stopped right at 400. That's why we knew 400 was definitely pivoting in the sand. Last time it's been at $400 a share was back in what? May of 2020. Let that marinate. This is why tech is what? This is why tech ain't hot, right? This is why it's hot now. This is why it dropped. And it still got, you know, to deal with this green candle right here. That's why it hit a hard pivot at 400. Or, you know, it's contending with that because that's the stop loss rate. If they pierce that 397, because we spoke about 397, right? 400 definitely, but if they get this candle right here, that'll be a stop loss rate. Meaning its stop loss is set at 400. There are stop losses set at 400. Look at the size of that candle. It could run on that entire candle and come down to 370 something. That's the if was a fifth. But if that happened, boy, y'all hear about it. Because I think that'll break my record, you know, for the biggest option contract payout I had for a little substrain for a little piece of chain. Right.
I was gonna say, wasn't it Hertz? Didn't you play Hertz?
I hit Hertz before, but I think the biggest one when we say falls ratio is still, I think it's still that stamp one because I did the ratio because that was just $20. $20 ended up making like 1860, right? Okay. $20 turned into 1860. So by value of that, if I spent 100 and it's worth $4,000, you see what I'm saying?
Yeah.
That breaks down. It'd be around about the same. Well, yeah, because it still put it at around about what, you know, $1,000 per what? For every $25. You see what I'm saying?
Yeah.
So that stamp one still beat. But again, if we break down, if we break down and come down and clean this candle up right here, or at least a good portion of it, maybe down 380, maybe if we hit 377, this will be the biggest one because that'll put that contract up about 8,000, somewhere around there, 7,000-8,000. So $7,000-8,000 for $100. It'd be, you know, that's how much that it'll be worth. That'll definitely be the biggest one. We'll see. But anyway, enough about all that. We're just gonna see what the market's gonna do tomorrow. As of now, we ready for it one way or the other, right? So again, go back and watch it on YouTube, guys. Archive it, do what we always do. This is part of our training session. You got some place to go back and kind of, you know, back test this information. Go go use it, right? Go fill in the gaps as they may be. Again, and helping you become better and strategizing the markets for your use case going into 2022. You got a blank canvas. You got a beginning of the year perspective. And before I get off here again, guys, get excited about doing the $5 challenge, please, if y'all can. I know I supposed to have been pushing that, but I'm excited about that, guys. It's still early. It's only 20 days in. See if you can do the $5 challenge with your household. If you got a spouse, if you got kids, they make it put in $1, right? You do 5, they put in $1, right? You match them. Get in the habit of doing that. That's also going to help you have money to invest at the end of the year, especially if you paper trade, you still learning the game. Start padding out your investment, portfolio value right now by figuring out how to put away $5 a day. Put it in the shoebox, put it somewhere conspicuous where you can see it, inconspicuous, where you can see it every day, and realize that this is your seed money. This you what they call doing what? A seed round investing for your future, right? Until you can start figuring out how to attach an interest value to it, accrue interest on it. This is how you're going to pad your account, right? So $5 times 365 is what? $1,800 at the end of the year. That means you got $1,800 in seed money to go to invest with that didn't hurt you throughout the entire year, figuring out you had to come up with it all in one lump sum. That's how you figure out how to fund your money or fund your accounts in a lot of ways. Just by being patient, and it teaches you discipline. So if you got a spouse, both of y'all do $5 a piece. You do what? 18, 50, whatever it is, time what? Time 2. There it is. You got over what? 30, what? 30, 37, $3,800, somewhere around there. What? Some of them like that. Right there to work with already. That's escrow in a lot of ways. That's investment escrow. That's what I'm going to call it. Investment escrow, right? That's a good name for it. Get in the habit of doing that. If you got kids, they put in $1. You'll match them $1, right? Whatever, right? Anyway, from $1 to $5. Some of y'all big balls in here, y'all can probably afford 10 a day, right? It'll be well worth the discipline. My opinion. And that's it, guys. So I'm gonna get out of here, guys. So thank you guys for your patience. Thank you guys for a year of great assessment. We still got to get through a lot of you guys with our 1-year assessment. So again, if I haven't got to yet, I'm coming. Trust me, I've been having to do a lot for the last 3 weeks. We knocked out, we got 4 of them in the day, right? Then early this morning, then we got in, got 3 people in early today too. So we're getting around to get everybody their 1-year assessment. So we ain't got to yet, it's coming. So we just got to find a date, and a time that works for everybody. And we'll get through our 1-year assessment and it's back to business as usual, right? Right. So thank you guys. So peace, power, profit, everybody. If you have any questions, don't hesitate, hit me up. Y'all got my inbox information. Y'all got my credentials, whatever you need. I'm here. Thank you, everybody on YouTube that's following along with us through our training session. We appreciate you guys always. Well, you guys are family. You guys definitely, add a lot of support for us too. And, in the building of this. So we thank you guys as well. Right. So that's it, guys. Anybody got anything before we get out? Any questions, anything, anybody? I'm gonna do church thing. All hearts are feeling and what I don't even forgot what they said in church. Now don't y'all come from me. I'm bad. Right? Hope everybody good.
Thanks, Oba.
Thank
you as well, Oba. Thank you as well. Thank you guys as well. Right? Y'all already know what it is.
Peace, family.
Peace to the family. Right? Peace, everybody. Right. Enjoy y'all evening, guys. We'll see y'all guys back in the room. Peace, everybody. Peace, family. Peace.